41 of the House of Commons Standing Committee on Finance. Pursuant to the House Order of Reference of today, Thursday, May 27th, 2021, the committee is meeting to study Bill C-30, an act to implement certain provisions of the budget tabled in Parliament on April 19th, 2021, and other measures. Today's meeting is taking place in the hybrid format pursuant to the House Order January 25, and therefore members are attending in person in the room and remotely using the Zoom application. The proceedings will be made available by the House of Commons website. Today we reach the stage where we deal with clause by clause on Bill C-30 after hearing from quite a number of witnesses. You'll see on the notice of meeting that there are many officials from across a section of department, quite a section of departments and agencies that are available to address questions of members as we wild our way through this bill. So keep that in mind, members, if you have any questions. We also have the legislative clerk here. I want to recognize and thank officials for their previous appearances before this committee and for being here today. Before I turn to clause by clause, members, I believe you've received a copy of a request for project budget, and we'll deal with that first if we could. Should be in your file or somewhere. Pat, you look puzzled. It's the project budget is the subject matter of Bill C-30. An act to implement certain provisions of the budget tabled in Parliament on April 19th, 2021, and other measures. And the amount requested is for the cost of the hearings that we are pretty near complete. And the amount requested is $9,750. So does anyone want to move that? I can move my screen here. Somebody want to move that?
I'm happy to move the motion, Mr. Chair.
Okay, good. Moved by Sean. Any discussion? All those in favor? Good. Carried. So we'll pay for this set of hearings after all. Okay. I think everyone has the clauses in front of them. So we'll go to clause by clause consideration of, I'll just read it so that we're sure. The pursuant to Standing Order 75-1, consideration of clause 1, the short title is postponed, and therefore will chair will call for clause 2. So we're then starting to deal with part 1. Amendments to the income tax and other legislation. There is no amendments from on clauses 2 to 14. Do you want to deal with them with them as a group? If there's unanimous consent, we can do that. All right. Shall clauses 2 to 14 carry on division? Carried on division? Peter, were you going to say something?
Well, I think, Mr. Chair, I think it would be on division throughout.
That's what I'm thinking.
Yeah. So if you could just keep that rhythm. Sometimes committee chairs, as you know, I know you've got a ton of experience, but sometimes they'll drop the on division and then we end up kind of getting it back
arguing over it.
Yeah.
Mr. Chair, if I might just make a comment. Given the fact that this bill has just landed on our table, and I know we've done the pre-study with witnesses, but we now have all the officials arrayed to be able to answer questions. As you know, yesterday we had the estimates at Committee of the Whole, which was a wholly unsatisfactory process with the minister not answering one question, not even one question. We now have the officials here, and I have much greater faith in the officials and their ability and willingness to provide us with real answers on the various clauses in this budget. I was hoping that what you were going to do is rather than clustering or clumping these clauses together, just let's walk through each one and do each one on division. Unless someone asks for a recorded vote, we just walk through each one so that we are very clear about what we're voting on, and we're given an opportunity to address each clause if we so wish. I just don't like the idea of bundling these and then doing an omnibus type of motion.
Not a problem. We can go through them. You do know there's
363. Yes.
363. Okay.
Yeah.
That's fine, Ed. So the clauses 2 to 14 are carried on division, though. And as Mr. Fast has said, if anybody has a question at any time for officials, just raise it, and we will hopefully have the right officials to come on to rule it. Okay, on clause 15.
Sorry. I have my hand up. Sorry, I know. I just last.
Oh, sorry, Tamara. I haven't got my participants on the side up yet. So okay, go ahead. My apologies.
I just want to make sure that I'm on the right page. Can you, when you say clauses 1 to whatever you said, have passed on division, can you tell me what is the title? What exactly am I looking at?
You're looking at Part 1 amendments to the Income Tax Act and other legislation. It's in Part 1.
And it says automobile operating expense benefit?
2, 3. I don't have the bill in front of me. It's just look under clause for the clause you're looking for. We've carried on division clauses 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and 14. So as we go through them, if you got a question, just fire away.
Yeah, Mr. Chair, if I could just ask that as we go to each clause, if you could read perhaps the first part. For example, we're now at clause 15, presumably. You would just say, listen, employee stock options. Do we go on division? Yes, go. Off we go. Then we go to 16. Just to be very clear about what we're dealing with.
I would have to go to about 3 books for me to do that. I think it's easier if I just say clause 15 and give you a minute, Ed. It'd be easier that way because I've got the amendments here. I got the clock. I've got too many papers in front of me, so
I've got all the clauses. Okay, I've got all the clauses here in front of me. If you give us a minute on each one, that's 363 minutes just there without debate, right?
We'll give you a little bit of time. All right. On clause 15, we have an amendment, NDP 1. Floor is yours, Mr. Julian.
Well, thank you very much, Mr. Chair, and I'm pleased to present NDP 1. What this would do is eliminate the stock option deduction. So essentially moving from half of the amount of the benefit to 0, which means that the benefit is eliminated. Very controversial, of course, because it goes to upper income earners. There are other ways to support startup companies that we have proposed, and we have seen, of course, it is CEOs, millionaires that preponderantly benefit from this particular approach. So the amendment would seek to eliminate that, and we of course would be looking to provide startup support that is more targeted to job creation.
On it, I'll give the chair's ruling that it's not in order, Peter. The effect of the amendment is to cancel the 50% taxable benefit that an employee could claim upon selling shares, resulting in an increased taxation. As the House of Commons Procedure and Practice, 3rd edition, states on page 772, quote, an amendment is also inadmissible if it proposes a new change on the people that is not preceded by the adoption of Ways and Means motion or not covered by the terms of a Ways and Means motion already adopted, end of quote. I would therefore rule that the amendment is inadmissible as it requires a Ways and Means motion.
Point of order, Mr. Chair.
Yep.
So I gather that we will go through this a number of times. So I'll take a few moments to basically map out what I intend to do, Mr. Chair, with full respect for, of course, your position. The reality is, as we've seen in finance committees in the past, the Liberal government has the ability to provide and accept amendments to a budget. We certainly saw that with the famous Jack Layton budget of 2005, where royal recommendations and Ways and Means were done retroactively. In other words, the government decided, because at that point it was on the verge of being defeated in the House of Commons, to accept opposition amendments. So the reality is these types of initiatives and these types of amendments are very much in order if the government accepts them. And your ruling is very much intended to say that the government is not in favor of these particular amendments. Now, that being said, and citing precedents, I do have the opportunity to challenge you diplomatically and with respect, Mr. Chair. I don't intend to do that for each amendment, particularly because you are giving me the opportunity to explain the amendments at the beginning. But I will, at certain points during the course of the examination of Bill C-30, be challenging your ruling, and I'll leave it up to a majority of the committee to decide what they intend to do with that. If, of course, a majority of the committee overrules your decision, we then have the ability to debate and adopt that amendment, and ultimately put pressure on the government to actually accept that amendment in a minority parliament. And we have seen in past minority parliaments that the government has chosen to accept those amendments. So while this particular ruling I do object to on the basis that the government should be actually looking to keep its commitments around the stock option deduction, I won't be challenging the chair's ruling at this point, and will reserve the time later on at certain moments to challenge the ruling. So thank you, Mr. Chair, for indulging me.
Thank you, Mr. Julian, and that is your right to challenge the chair and the chair's rulings. But I would point out I'm not speaking on the government's position. I am speaking on the basis of the House of Commons procedure and practice that has made that decision as it relates to a Ways and Means motion. All right, then the NDP one is out of the is ruled out of order. Shall clause 15 carry? And I'll wait a few minutes, or not a few seconds. I mean,
on division is what you're suggesting, right?
Yeah, on division. We're okay. Carried on division. So, okay, well, we'll go to clause 16. Carried on division.
On division.
Clause 17. And carried on division.
On division.
Division. 18. I just want to make sure. Tamara asked earlier. I think Tamara, you're wondering.
I'm trying to scroll as fast as you're saying the number.
Okay. You just look a little. You look a little lost. If you're behind, tell us to slow down, Tamara. We want everybody to have a chance to have their say.
Well, I thought what my colleague, Mr. Fast, had said, where you could just say a slight thing. It's a little bit easier to find than one number. I mean, this is pages and pages, and I'm scrolling as fast as I can, and I can't catch up. Is there not some way that's, the finance official that's in charge of that number could just, give us a real quick rundown so that we also have time to find the spot?
Great idea.
I think that we have to hopefully finish this by 7:30 because we run out of time at that point.
I guess that's the challenge. Like, this is a massive bill, and you're giving us so little time for this. I'm just absolutely mind boggled. And I get that, it's easy to say, well, it's all boring. This is a massive bill with massive dollars being spent. And I can't even scroll fast enough to find the section we're talking about. And we have all these officials here who could speak to us to kind of help us, make sure that we're walking through it. We have such a responsibility.
We'll bring them in if there's a question on a clause.
Well, no, I appreciate that,
sorry,
but I can't even scroll that fast.
I have Mr. St. Marie with his hand up, and then Mr. Fragaskatis. Mr. St. Marie.
Yes. A trick to find your place in the document more quickly, because it's easy to get lost. If you look at the top, it says the section or the article. So it's at the top of each page of the PDF document, as you can see there. So it tells you.
I'm scrolling through the document on my computer.
Merci.
If somebody else wants to take on that task, I'm okay with it. I just got too many papers to pay attention here on that, Tamir. Okay, does clause 18 carry on division?
Hold it. I think there's two more hands up.
Oh, sorry. Mr. Fragaskatis and then Mr. Fast.
Well, thank you to Mr. Fast for noticing my hand up. I appreciate that. Mr. Chair, let me just remind colleagues that the subcommittee decided that we would be through clause by clause today. So I appreciate that they want to ask officials questions. I guess that is their right. But we do have the subcommittee's decision that has been decided, is set, and attempts to perhaps, not to imply that this is certainly the case, but attempts to draw this out would really put the subcommittee's decision at risk of not being followed, and we subcommittee's decision.
Okay, I don't want to get into a debate on the subcommittee report. Mr. Fast and then Ms. Jansen.
Well, Mr. Chair, we just got into a debate on the subcommittee report, thanks to Mr. Fragaskatis. I would say this. This is a budget that took over 2 years to be delivered. There's 563 pages, plus there's a notice of Ways and Means motion of 170 pages. The budget itself is 724 pages long. The BIA was just passed in the House of Commons. It just landed on our table. And Mr. Fragaskatis is suggesting that, well, you know what, I'm not sure we should allow or have members of the opposition ask officials questions. Are you serious, Mr. Fragaskatis? We are going to do our job as an official opposition to exercise scrutiny and oversight over what is the largest budget in Canadian history. And I hope some Canadians are watching and they see this duplicity playing out here, where we've got a government that for 2 years wouldn't deliver a budget, now delivers the biggest budget in history, the biggest spending budget in history, biggest debts, the biggest deficits. And we're not supposed to ask questions on this?
Well,
come on, Peter, you're better than that. So, I apologize for getting a little bit agitated here. And yes, Mr. Fragaskatis, he pushed my button there, but I think it betrays the attitude that some of our Liberal friends bring to this table. We have a right, Mr. Chair, I think you will agree, we have a right to exercise proper and reasonable oversight over the spending of this government. This budget is part of that. This BIA is part of that. So I'm not going to be prevented from doing my job because someone wants to ram this thing through in 4 hours. I'm not going to be bound by a subcommittee decision that will only have 4 hours to debate this. If it takes more time, we should be taking more time, which is not to suggest that I'm going to unnecessarily delay this. We've already said we're quite prepared to allow some of these clauses to go on division. That's fair. That's a nice way of speeding this up. But we will have a fulsome debate here, Mr. Speaker. You've been around for a long time. You understand the value of fulsome debate. And I ask you to allow us to have that debate.
Okay, we're not going to limit the debate. I'm just saying there is a bit of urgency here, and that's fine. Your points are heard, Mr. Fast. Mrs. Jensen.
I just want to say that I was really looking forward to the fact that the officials were here, because the last time they were here, they were very good at giving us fantastic explanations so we could really dig in and understand each of the different issues. And for Mr. Fragiskatos to suggest that I'm trying to make this take too long is absolutely outrageous. I mean, if I go to my accountant, I can ask questions. And I can't ask questions of the officials who are here, they've come. They did a great job last time. I'd love to be able to ask the same questions again. This is billions of dollars. And the idea that I can now suddenly not ask questions because you have a timeline, this is Canadians' taxpayer money. We need to be very, very conscientious. Honestly, like, how can we think that we can do this that fast and then pretend like the officials are here to help us? Are they here to help us now or not? I cannot follow it as fast as it's going. And I mean, and if you just look at the document, you can see why it's not that easy. As Mr. Easter has mentioned, we're dealing with all sorts of different levels of documents at once. Please give us the time to actually ask questions. If the officials could kind of give us a little bit of an overview of what it is we're exactly looking at, which clause, so we have like a chance. Because right now, the way we're doing it, we don't have a single chance.
I'm trying to pull up my bill on the computer here so I could do that if I could get it. Okay, we're on clause 18, and that's carried on division, I believe. Before we get into that discussion, and
can you hold on?
Yeah.
I had something on clause 18. Hold on a second. My goodness. Okay. I just want to make sure I'm on the right one. Can we get an official to tell us exactly which one clause 18 is?
I see Mr. McGowan on there. I believe he's prepared. Are you prepared to answer that, Mr. McGowan?
Thank you. I'd be happy to speak to clause 18. Clause 18 of the bill amends section 117.1 of the Income Tax Act. The act contains a number of amounts that get indexed to inflation, and section 117.1 provides the indexation of various amounts listed in that provision. So what the amendment does is, first it reorganizes 117.1 sub 1 because it used to be a bit hard to read, and it sets out all the different things in the act that are indexed to inflation and what their starting indexation value was. The actual amendment is actually consequential on the adjustments to the Canada Workers Benefit. And in particular, certain amounts under the Canada Workers Benefit are indexed to inflation. And so what this would do is it would provide indexation of those amounts. For example, the new $14,000 threshold for spouses.
Thank you so much. I appreciate that. Very, very much appreciate.
Okay. Then clause 19.
Would it be possible to get one official to quickly give us that, like a quick rundown?
All these sections in part 1 relate to the area that Mr. McGowan's responsible for. So clause 19, do you want to give us a short and dirty, if you could, Trevor?
Thank you. I'd be happy to. Just to point out that many of these clauses will actually touch on several different measures proposed under the bill. This is one of them. Clause 19, I think we're on, amends section 118 of the Act, which provides calculations for a lot of personal tax credits. And so in clause 19, you'll find the amendments to the basic personal amount. You'll see that, for example, in subclause 19 sub 3. That increases an additional increase to the basic personal amount, which is the amount that each individual gets essentially tax-free. The increased amount ground down for higher income earners. It also includes an amendment relating to spouses and who qualifies as a wholly dependent, and this can be relevant for the purposes of the Canada Child Benefit, and that's where a child is whether or not they're in shared custody parenting situation, to provide that will be the case if it's between 60 and 40%. And third, it has consequential amendments on the introduction of the new provisions for advanced life deferred annuities, or ALDAs. The main rules are later on in the bill, but the ALDAs would allow for these annuities to be held in certain tax-deferred plans that would provide greater flexibility for saving for retirement.
Anything? I see Mr. Fast and then Mr. Falk.
Thank you for that explanation, and I really do appreciate the officials giving us answers, unlike last night, which was a disaster. You mentioned that these personal tax credit, the basic amount is means tested, correct? It's clawed back at the higher income levels. Is that right?
That's right. It's fully available for individuals who have income up to the top of or the bottom of the second highest tax bracket, and then over the course of the second highest tax bracket, it's gradually reduced, and then the additional amount is unavailable for individuals with income in the top.
So the
top marginal rates.
Yeah. So the basic personal amount is effectively means tested based on, or am I incorrectly understanding that?
Oh, I apologize. But it's the additional amount. So there's the basic personal amount that is not means tested. Everybody gets it. It's not changed. It's just the additional amount that was announced that is means tested. So there are now two components in the basic personal amount.
Okay.
The amount that existed prior to this measure and continues to be there and be indexed to inflation, which is not means tested, and then the additional amount that is.
All right. Thank you for that explanation.
Mr. Falk?
I think my question was actually similar to Mr. Fast's, Mr. McGowan, because you used the word that for higher income individuals, it's the basic personal exemption is ground down. Is this the first year we're applying that?
Mr. McGowan.
It applies as of the 2020 taxation year.
Thank you.
So people just filing will have done it, but it applies as of 2020.
Okay, then clause 19 carried on division. Clause 20.
Are we going to continue to get like a quick
Okay, very quickly, if you could, Mr. McGowan.
I'd be happy to do so. Clause 20 relates to the digital news subscription, and it amends section 118.02. This provides that recent amendments announced in the context of support for Canadian journalism announced three measures. They're sort of scattered throughout the bill as they relate to different sections. This particular measure relates to the digital subscription news tax credit, and it provides a number of technical amendments, including the fact that when you cease to qualify for the subscription tax credit, you send out notifications to your, you can send out notifications to your subscribers, and then the subscribers will have a little bit more time in order to be able to claim the credit. So this provides technical enhancements in respect of the digital news subscription tax credit.
Okay. Any for Ms. Jansen?
Yeah. I was just wondering, I read an article somewhere where it was talking about the possibility that one of these would actually allow digital news to double dip. So I wonder if that's somewhere in here. I'm sorry. To double dip on COVID programs, COVID support programs, but that's not this one yet. Just give me a shout out when we get to that one.
Thank you. I will. I have not seen that article. I do know there is a labor tax credit for qualifying journalism organizations, as well as a wage subsidy under the COVID relief. Maybe it relates to that, but both of those two measures are to come.
Okay. All right. Shall clause 19 at the 20, we're on 20, right? I might have circled it. Yeah. Shall clause 20 carry on division? On division?
On division.
Shall 21? And a quick little go here too, I guess, Trevor, if you could.
Happy to do so. I apologize. I glanced quickly at the section 118 amendment that was relating to the basic personal amount, and there was a spouse, a measure relating to spouses. And I described a measure that was appearing a little bit later. Clause 21 is actually the measure that that provides clarification on who qualifies as a shared custody parent. And again, that's to clarify that if you have between 60 and 40% time with the child, then you'd be a shared custody parent. And
okay, on division. Carried on division. Clause 21. Trevor?
Okay, clause 21 relates to the Canada Workers Benefit. That is budget 2021 announced a significant enhancement to the Canada Workers Benefit, both in terms of expanding access and then also providing additional flexibility where a spouse earns income. So this relates to the enhancement of the Canada Worker Benefit.
No questions on carried on division? On division?
On division.
22 clause, shall clause 22. Just a quick word on it if you could, Trevor.
Of course. Clause 22 amends. Clause 22, that's the one.
I believe we just did that one.
Right, that's the Canada Workers Benefit.
Yep.
I'm so glad. I thought, okay, now I'm losing my mind again, but I was okay. I got it. Back on track.
So clause 23 relates to the tax credit in support of labor expenditures for qualifying journalism organizations. This provides support for journalism on their newsroom employees. Again, it contains a number of technical amendments in order to ensure that the program better meets its objectives. With respect to any potential double dipping, I'm not certain actually. I've not seen the article, and I'm not sure how that would work, as the journalism rules do take into account government assistance received. So I'm afraid I can't speak to the specific tax planning that was mentioned, other than to point out that the rules do contemplate and that you may be able to claim both credits, and the amount for journalism is reduced by the amount of government assistance, which would include amounts received under the wage subsidy.
Right. I think that's exactly what this article was talking about, that it's in essence being able to double dip. Oh,
Okay, we didn't vote on clause 22 yet. I know some thought we did, but we didn't. So let's vote on clause. All those in favor of clause 22
On division.
On division. And we're on clause 23, and Trevor has explained that. Is there any further questions, Mr. Fast?
Yes, Trevor, can you explain this tax credit? Is it available to every journalism organization? For example, can the CBC apply for this?
In order to apply, there are a number of conditions that need to be met. First of all, you have to be a qualifying Canadian journalism organization. So you apply, you meet those standards. In addition, there are additional conditions that need to be met in order to be a qualifying journalism organization for the purposes of this tax credit. One of those conditions is that you not be involved in broadcasting, as this is intended to support primarily print media. And so you'll see, for example, at the top of page 25, one of the amendments relates to not being involved in broadcasting. So if you have a broadcaster, then that would not be eligible for the journalism labor support credit.
All right, that's helpful. Thank you.
Okay, shall clause 23 carry on division? On division?
On division.
On clause 24, Peter Julian, you have an amendment?
I have a number of amendments, Mr. Chair. So if you'll indulge me, I think what I would do is speak to NDP 2, 3, 4, 5, 6, and 7.
Okay.
That being said, we also have
there's also an
amendment de Monsieur Saint.
I also have an amendment, Mr. Saint-Marie. So I don't know how you want to deal with this.
You can speak to your amendments there first. Then I'll give you the ruling. And we'll go to Mr. St. Marie, but I will have to deal with each clause at a time, but speak to them all at once, and I'll go through them one by one.
Well, Mr. Chair, I mean, this is not something that is a surprise to the committee at all. What these amendments seek to do is extend the wage subsidy until the end of the year and extend the rent subsidy until the end of the year. We have heard repeatedly from organizations, particularly the tourism industry, that has been very clear about the importance of not closing up shop and assuming that the impacts of COVID are over with, but rather extending those supports so that we can have small businesses actually get through this third wave. Possibly a fourth wave, hopefully not, but we need to make sure that those supports are in place. There's been very, very compelling testimony. So there is no doubt that this is what numerous witnesses have been calling us to do, to extend the wage subsidy with certain conditions that I'll come to a little bit later on. There have been some abuses, and we need to make sure that those abuses are curtailed, and ensuring that the rent subsidy is there for small businesses as well. The idea that we start to scale down COVID when so many people are continuing to be impacted by this third wave that is still crashing on our shores is something that is very perplexing. And that's why so many witnesses came forward to say you really need to ensure that there is an extension and a provision so that these programs provide the support that is so desperately needed at this time. So that is the intent of the amendments. They are linked. So essentially, we're talking about extending the wage subsidy until December 31st, extending the rent subsidy until December 31st. And in that way, ensuring that we actually have the wherewithal to provide supports to small businesses, the tourism industry, at a most desperate time for so many of them.
Okay, on NDP 2, and I know they all relate to the same clause. On NDP 2, the amendment creates new admissibility periods, which will result in more money coming out of the Treasury. And so, as House of Commons procedure and practice states on page 772, since an amendment may not infringe upon the financial initiative of the Crown, it is inadmissible if it imposes a charge on the public treasury, or if it extends the objects or purposes or relaxes the conditions and qualifications specified in the royal recommendation. End of quote. Therefore, for those reasons, the amendment is inadmissible because it requires a royal recommendation.
Point of order, Mr. Chair.
Yep.
Thank you. So I mentioned at the beginning of this, we know that the Liberal government is not interested in amending what is a bill that is fraught with problems and does not meet the test of what so many people and so many businesses across the country are calling for. So the ability of the government to also provide a royal recommendation, to also ensure that these amendments are acceptable, has been tested in the past. And as you know, Mr. Chair, most notably in the Jack Layton budget, where Liberals decided to apply those royal recommendations, even though there were substantial changes in the budget. The initial budget from Paul Martin was inclined to give massive supports to the corporate sector. Jack Layton and the NDP caucus, and I was a proud member of the NDP caucus at the time, said, no. We're going to change spending priorities. Instead of these massive tax cuts, we're going to provide supports for seniors, for post-secondary education, for public transit, for housing. In fact, one of the housing developments just up the street on 6th Street is a result of the famous Jack Layton budget, because there was housing made available by the fact that the Liberal government at the time, desperate to not have an election, decided that they would provide those royal recommendations and allow those amendments. So you are ruling me out of order. I will not challenge the ruling at this time. I will be challenging the ruling in a diplomatic, an appropriate way later on. Okay. But I do want those who are listening to be aware that this is a choice that the Liberal government is making.
So NDP 2 is ruled out of order. On NDP 3, which you already spoke on, the amendment creates new admissibility periods, which will result in more money coming out of the Treasury, and therefore, because it requires a royal recommendation, we will have to deny it as well. No challenge on that one. Okay. NDP 4. The amendment.
I believe, Mr. Chair, Ms. Zerowitz has her hand up.
Oh, did she? Ms. Zerowitz.
My hand is so light, I think I have to make it much darker. I think it matches the 1970s.
It does.
Cupboards, unfortunately, in my kitchen. I'm sorry, Mr. Chair. That is my bad, not yours. I'm trying to replace it. I just want to put on record, because I think it's important to say for those that are listening, Mr. Chair, that Bill C-30 currently does provide the authority to extend the wage subsidy program through regulations until November 20th, 2021, should the economic and public health situation require it. So I don't want anybody to think that November 2021 is the only period. There is an ability under this current bill that we're considering through regulations to be able to continue to extend the wage and rent subsidies to November 20th. So I just want to make sure that we stated that on the record. Thank you, Mr. Chair. And thank you, Mr. for pointing me out.
Then that is, so NDP 3 is out of order. NDP 4, for basically the same reasons, it requires a royal recommendation. Therefore, it's not admissible. Mr. Kelly.
I wondered whether, not that I don't want to take Ms. Zerowitz at her word in the explanation that she's just given, but I wonder if officials, since we have them here, could comment just for the record, as Julie has pointed out, whether or not there are provisions within the bill for the extension so described by Ms. Zarowitz. Is that, if I can have an official weigh in on that, please?
I'm not sure what official can answer that. I don't know. That's Trevor's area. It's more wage subsidy, I believe. But go ahead, Trevor.
Thank you. I would be happy to do so. There are provisions in the bill that would allow for the extension of the wage and rent subsidies up until the end of November. There are currently 2 additional qualifying periods at the end of the subsidies. One runs from September 26th to October 23rd. That's the 21st period, and then the second is from October 24th to November 20th, the 22nd period. For both of those periods, you'll see that the parameters being the base percentage, which provides the subsidy rate for the wage subsidy, and then the rent subsidy percentage, which provides the rent subsidy, are set at 0% with the ability to change those subsidy rates by regulation. And those are the specific mechanisms that would allow for the extension of the wage subsidy. So the periods are already in place, and then if an intention is to be made to extend the programs, then the subsidy rates could be increased from nil to whatever is appropriate.
Okay, thank you. Understood.
Mr. Julian.
Thanks very much, Mr. Chair, and thanks, Mr. McGowan, for the explanation, which basically contradicts Madame Zarowitz. The reality is, at this point, there is no provision that allows for an extension of the wage subsidy as we know it, or the rent subsidy as we know it. As you point out, it is 0 rated, which means at this point, we would be basically saying to Liberals, well, we hope you do something. That's why the amendments and the Liberal government actually accepting the Royal recommendation, but basically saying, yes, we will endorse these amendments, would have made a real difference in people's lives. And we've heard very compelling testimony from so many Canadian organizations, small businesses, the tourism sector, that this is fundamentally important. It is 0 rated, so it is not correct to say that the wage subsidy and the rent subsidy are somehow going to be renewed or renewed for a certain period. It is only an option, and that is why it would have been important for the government to accept these amendments that actually make it a reality.
Okay, and for those that aren't sure, we're on pages, this relates to pages 31 to 33 of the bill. I finally found a bill with the numbers and the pages rather than the scroll. So NDP 4, I've ruled out of order. Before we go to the next NDP one, to Mr. St. Marie, BQ 1.
Oui, merci, Monsieur.
Thank you, Mr. Chair. So the first amendment that I have is to specify that political parties are not specific entities under the wage subsidy. We know that in the implementation for wage subsidies, admissible entities are indicated and political parties are not included. When I'll have finished my explanation, I would like to ask for confirmation from that from officials. And it seems that the criteria to qualify have been interpreted by the Revenue Agency rather broadly, and some political parties have used it. From our point of view, they took funds that were for businesses and nonprofits. So what the amendment would do is specify that political parties are not determined entities under the sense of the wage subsidy. Thank you, Mr. Chair.
Okay, and did you want an answer from officials on that, Gabriel?
Oui, si.
Yes, if the officials can confirm that political parties were not included as being eligible in the Wage Subsidy Implementation Act. Thank you.
Mr. McGowan.
Thank you for the question. Currently, the classes of eligible entities which are eligible, they provide the basic level of eligibility for both the wage subsidy as well as the rent subsidy in the new hiring program. When those were introduced, there are certain classes of entities that are eligible. Broadly speaking, one of them is not-for-profit organizations. And my understanding is that political parties tend to be organized as not-for-profit organizations, and as such, they would be qualifying under that head. And there are no specific rules that currently would prevent political parties from applying for the wage subsidy.
Okay, is there any further discussion on BQ1? It is admissible. Any thoughts from anybody else? All right, we will have to go to shall BQ1 carry?
On division.
No.
You're
put it to a
asking.
vote, Mr. Chair.
Okay, a vote has been called for. Mr. Clerk, can you poll the members?
Ms. Derowitz.
No.
Mr. Fragiscatos.
No.
Mr. Fraser.
No.
Ms. Koutrakis.
No.
Mr. McLeod.
No.
Mr. Falk.
No.
Mr. Fast.
No.
Ms. Jansen.
No.
Mr. Kelly.
No.
Monsieur Sainte-Marie.
Oui.
Monsieur Julien.
No.
Pour, yes 1. Nays, contre, 10.
Okay, the motion is lost. Then on NDP 5, I believe you explained it in your previous one. You explained the first 7, right, Peter? On that one, the amendment extends the existing admissibility period referred to in the bill, which will result in more money coming out of the Treasury, and therefore the amendment is inadmissible because it requires a royal recommendation. So that one's on no challenges. And that NDP 6, basically the same reason that it requires money to come out of the Treasury, and therefore it requires a royal recommendation and is inadmissible. NDP 7, and I think you explained them that far. Basically the same reason again. It does require money out of the Treasury, and therefore requires a royal recommendation, and I declare it inadmissible. Okay, BQ 2, Gabriel St. Marie, and I should say on BQ, I'll let you explain it first, and then I'll make a comment. Gabriel?
Très bien, merci, Monsieur le Président.
Thank you, Mr. Chair. In the budget, the minister announced that to continue to receive the wage subsidy, the leaders of businesses should no longer have bonuses. I'm simplifying things, of course. So it would only be starting in June. So what this amendment would say is, rather than create an incentive for companies to give bonuses between August and June, we would make it retroactive to April 19th, which would be what should be done to not create an incentive in this case. Thank you, Mr. Chair.
Okay, thank you. And I just note for committee's interest, if BQ, if the block motion 2 is adopted, NDP 8 cannot be moved due to line conflict. So is there any further discussion on BQ 2? I see Peter. I see Gabriel first and then Peter.
Ben, je peux laisser Peter parler.
I can let Peter go first. I saw his hand first.
Okay. Go ahead, Mr. Regiscatis.
Yeah, I was just going to say, Mr. Chair, that I'd like a vote here, please.
Oh, before I go to a vote, I'd seen Mr. St. Marie's hand and Mr. Fox, Mr. St. Marie, and then Ted.
Oui, ben, j'aurais.
I would have liked to hear comments from Peter Julian on the difference between the amendments. Of course, my amendment is to make the measure retroactive to the beginning of the budget when the measure was announced. And if I've understood correctly, my colleague's amendment would be to make it retroactive to before then. And the reason we chose the tabling of the budget as a date, it's to say that's when the measure was announced and we wouldn't make it retroactive before then. And that was our perspective. And of course, I prefer my motion. Thank you, Mr. Chair.
That's kind of natural. So I'll go to Mr. Falk and then I'll ask Mr. Julian to explain his motion so we know what they're both saying because one impacts the other. Mr. Falk.
Thank you, Mr. Chair. And I'm just wondering if we could just weigh in for Mr. McGowan as to his perspective. This is a section that deals with publicly traded companies only, or does it apply to all companies?
The requirement to repay in respect of increases in executive compensation only applies to publicly listed companies and their subsidiaries.
Mr. Is that, I'll go to Ms. Jansen first because I think her question relates, and then I'll get Peter to explain his amendment. Ms. Jansen.
Yes, I'm just really concerned about the concept of doing something retroactive. I mean, if there's one thing that business needs, it's in order to function, it's to be predictable. And that's one thing that we have not had from many of these programs. But even to consider the idea of making a retroactive policy is just, it's mind-boggling. We know the fact that many of the programs were created in haste and had many flaws. And we assume that the Liberals had the best of intentions of ensuring that the maximum amount of jobs were protected during the pandemic. Businesses applied for these programs based on the criteria the government set for them. It's the government that set those criteria, flawed as they were, but you can't go back and blame the flaw on the applicant.
I'll go to Mr. Julian's explanation, then Mr. Vast. Mr. Julian.
Thanks very much, Mr. Chair. Well, I would like to point out, of course, that last June, we were considering legislation that retroactively punished CERB applicants, retroactively. And it was only the NDP standing up against that legislation. This was legislation that would have moved to even include prison sentences for CERB applicants. That legislation was eventually withdrawn. So the idea of retroactivity is something that we've seen this government move on in terms of CERB, not in terms of the wage subsidy. Now, the wage subsidy from the very beginning, and members of this committee will recall when Mr. Morneau came forward that this exact question was asked to him. Are you making sure that there is no possibility of these funds being used for dividend payout, stock buybacks, and executive bonuses? And certainly other countries put into place the wage subsidy. The NDP pushed the wage subsidy. Jagmeet Singh pushed it because it made good sense to maintain those jobs. But other countries put in place the protections. Mr. Morneau said at the time, yes, those protections will be in place. And at the time, the Liberal government was very clear that it could not be used for those things: big executive bonuses, dividend payments, stock buybacks. So that is, I think, an issue that the public is certainly seized with, and they expect us to be responsible and expect us to be in in a cohesive way, ensuring that these abuses that were flagged from the very beginning are actually taken care of. Maintenant, Monsieur Saint-Marie a posé la question.
Now, Mr. Saint-Marie asked the question, what's the difference between his amendment, which is very good as well, and our amendment? We think it should be as of April 15th, 2020, which really is the beginning of this whole process. And from the beginning, it's been very clear that you weren't supposed to use, executives weren't supposed to use this for dividends, for bonuses, for executives, and for stock buybacks. So it's very clear in my opinion, and I think in the public's eyes as well. We need to take measures that reflect what the government said last year when they presented the bill.
Okay, Mr. Fast.
Well, thank you. I will share with members of this committee that I've had calls from some of Canada's largest business organizations pleading with us as a committee not to go down the road of retroactively punishing companies for the program design failures of the government. I mean, this is a terrible precedent to set. Could I ask officials to tell us whether there is any past precedent that has seen the government claw back benefits that were paid because of its own negligence or design failures or similar? I'd be surprised if government has done this in the past, which is probably why we've received these panic calls from business organizations.
Is there an official in the room wants to take that, Mr. McGowan? I hate imposing on you all the time, but I'm going to.
Well, thank you for your question. There is the possibility for retroactive tightening tax changes, but as was noted, they tend to be exceedingly rare, and I can't think of any off of the top of my head. I know that there is the possibility of doing it, but I can't recall any retroactive tightening tax changes that would apply in the context of like a refundable tax credit that involves the taking back of amounts expended. I can't think of any.
Is it possible that this would be legally challengeable if the government implemented something like this?
I can't provide advice on the merits of any sort of a claim against this type of change.
Okay, I have Ms. Jensen and then Mr. St. Marie, and then hopefully we can go to a vote.
I mean, we knew right from the beginning that there were many flaws in the programs. They were rushed, and it created all sorts of problems. But two wrongs don't make a right. This amendment would mean that every program could possibly be altered retroactively. The impact of this kind of instability on our business sector and our economy would be unimaginable. I mean, you can't change the rules in the middle of the game. Of course, if someone improperly took program funds, that's one thing. Canadians expect that you'll collect that back. But these were the rules that were set. Now, to solve the problem that was created by placing the blame on the people who legitimately qualified under the rules is undemocratic and dangerous. I mean, imagine the government would suddenly reverse the rent subsidy retroactively on a restaurant if they were able to pivot successfully to online orders. I mean, the amendment opens a Pandora's box that we cannot afford to open.
Okay, Mr. St. Marie and then Mr. Julian will close it out.
Oui, merci, Monsieur le Président.
Thank you, Mr. Chair. Two things on this amendment. First, in economics in university, we learn that if the minister says no more subsidies, but we'll stop it in June, not now, that doesn't send the signal that there's no longer a subsidy. it sends a signal that they need to do it between the tabling of the budget and June. And if we want to avoid bonuses, there's nothing worse than such a measure. I can imagine that politically you could say, we put a measure in place to stop bonuses, but in reality, we know that just sped things up. So there could be no worse measure in terms of economics. And that's why I made my amendment. Second thing, to my knowledge, these amendments are confidential until they are tabled in committee. So I find it very curious that business executives have already called members of this committee to complain about this amendment, which is confidential until now. So I have grave concerns about that. Thank you, Mr. Chair.
Thank you, and that's a very valid point. Mr. Julian.
Mais moi aussi, Monsieur le Président.
Me too, Mr. Chair. To say that senior executives have called members of the committee, I didn't receive any calls. And these amendments are confidential. So it's rather curious. Now, we've already had cases, Mr. Chair, I will conclude. We've already had cases, of course, that were tested before the courts in Canada. And yes, retroactivity has existed. You just have to look at tax reviews to see cases. This is not something that's unusual.
All right. I am still going to see people's hands up, so I'll have to go to Ms. Jensen and then Mr. Fast.
I'm just really worried about, driving populism with something like this. You're making business owners who fought hard to maintain Canadian jobs during lockdown by legally utilizing the available government programs into the evil villain. It only leads to serious market insecurity and damage our reputation abroad. Like, who will want to do business in such an unpredictable environment as this? Are we trying to chase jobs away? Like, this government needs to continue to protect jobs and businesses who maintained those jobs during the pandemic. Like, today, we heard from the PBO, he reported that the budget plans to spend $150 billion and will only create 66,000 new jobs.
Ms. Jensen, I'm going to have to start keeping people right on the motion because we're not going to get into political debates and what the PBO said when we're dealing with clause by clause as yet. Go ahead.
Well, I just
we're straying.
Really worried. Job creation isn't the government's forte. So we need to let business work to create jobs and not punish them for program failures.
Okay, Mr. Fast.
Mr. Chair, did you just rule that political debates over a budget bill are not acceptable?
What I said was let's try to stick to the discussion on the amendment.
Okay, I think what you're doing is you're saying it's about relevancies, and
yes,
and there I might be able to agree with you. I just want to say I hope my colleagues, Monsieur Saint-Marie and Mr. Julian, aren't casting aspersions on anyone at this committee. I'm not aware that anyone in this committee released confidential information to anyone out there in the private sector. But I'm telling you, I have received calls from business organizations, not companies, not C-suite executives, but from the organizations that represent businesses in Canada that for some reason have been made aware that there is a possibility that retroactivity will be imposed in cases where it was not the business's own fault. It was actually the government's own fault. And I think it's fair for us, Mr. Chair, to share that information with our committee colleagues so that we have all of that, know the concerns that are out there.
Okay, thank you, Mr. Julian.
Thank you very much, Mr. Chair. And I wanted to be very clear that from all of the data, and the government has not released this information, I wrote to the finance minister on January 5th Still have not received a response. But from the publicly available data that both the National Post and the Globe and Mail have analyzed, we see that in 95% of cases, the money was used for its intended purpose. So I do not agree with those who say, well, this is going to be a catastrophe, when 95% of businesses stuck strictly to the intent and the spirit of the wage subsidy. But that other 5% is the problem. And as a result of that, there needs to be, I think Canadians would expect that those bad apples have as a result of that, to pay back money that they took for one intended purpose and used for another. That's very simple. Most Canadians would agree to it. I would just mention in terms of jurisprudence, and this is just a very, very quick glance at retroactive legislation, including tax legislation. We have the Rule 14 declaration, Rule 21, Procter & Gamble. These are all cases where the courts have upheld retroactive decisions. So let's not have red herrings. Let's deal with this issue of whether or not somebody, a big Canadian company that has made profits and not used the wage subsidy for its intended purpose, whether they have to pay that money back. And I would expect the vast majority of Canadians would agree that if you're part of that small percentage of companies that abuse the wage subsidy, they should pay the money back.
Okay, we've had a discussion on both Block 2 and NDP 8, and we'll go to BQ2 on the motion. Is anybody calling for a vote? Do you want a recorded vote, or just want? We'll go to recorded vote. Mr. Clerk, if you could go to a recorded vote in BQ2.
Ms. Derowitz.
Malheureusement, non.
Unfortunately, no.
Mr. Fragiscatos?
No.
Mr. Fraser?
No.
Ms. Kotrakis?
No.
Mr. McLeod?
No.
Mr. Falk?
No.
Mr. Fast?
No.
Ms. Jansen?
No.
Mr. Kelly?
No.
Mr. Sainte-Marie?
Oui.
Mr. Julian?
Oui.
Yeas pour 2, nays contre 9.
Motion is defeated. Then to NDP 8, which we already had a discussion on. Do you want to vote?
I think we had a good discussion. I think the results are
okay.
Are pretty clear, Mr.
NDP 8 is defeated. On NDP 9, if you could, Mr. Julian.
Mr. Chair, for NDP 9, this was tied to the extension of the wage subsidy. So I think because we have already not agreed to the extension of the wage subsidy, tragically, I think I will withdraw NDP 9.
Okay, NDP 9 is withdrawn. BQ3, Gabriel.
Oui, merci, Wayne.
Yes, thank you, Wayne. So in this amendment, what we're proposing is that we know that for the wage subsidy, what's been announced in C30, the percentage of the subsidy decreases. But we know that the minister has the power to change that percentage by means of regulation and leave it higher if necessary. Several people came and told us at the C30 meetings of the committee that it was very important for their industry, for their economic sector, to keep the higher level of the subsidy. So this amendment gives the minister the power to increase the rate, not for the entire economy, but for certain economic sectors which she could target of which those that are particularly affected, who said that the results will be catastrophic in the fall if these rates continue to decrease, the minister could then increase the percentage of the wage subsidy in those sectors. Thank you, Mr. Chair.
Do I have...
pardon, pour subvention.
And I'm sorry, so for wage subsidy and rent subsidy, sorry.
Okay, Ms. Zerowitz.
Thank you so much, Mr. Chair, and I want to thank Mr. Saint-Marie for this. I just want to understand this a little bit. I believe that we already have the authority to be able to do this, and I wonder if the officials would be able to weigh in, so the authority under the current legislation to be able to do it.
Thank you. I would be happy to speak to that. I'll start with the wage subsidy, but the considerations for the rent subsidy I think are exactly the same. So if you look at paragraph K of the base percentage definition, it's towards the bottom of page 30 of the bill, line 27 or 28. That allows for, that sets the base nil rate that we discussed earlier for the wage subsidy for the last 2 qualifying periods. And it allows for the flexibility, should the government decide to effectively extend the wage subsidy into those 2 periods, as circumstances may require, to set new rates by regulation. The specific wording in paragraph K is that a percentage can be determined by regulation in respect of the eligible entity. So there's a lot built into those words, but the idea is that if you have an eligible entity who's basically an applicant for the wage subsidy, that you can determine by regulation the appropriate rate that applies in respect of that eligible entity. So it allows for determinations by regulation, and the idea that different rates can apply in respect of different eligible entities. So it's not just one rate that applies across the board. The idea was that the ability to determine different rates in respect of different eligible entities would provide for that kind of flexibility.
So just to continue with that, Mr. Chair, I want to ask, so that it would allow us, if we wanted to provide some more supports, more targeted supports to specific sectors, we'd be able to do so using this clause. Is that true, Mr. McGowan?
Yes, that was the intent behind the wording I just discussed. That different rates could apply for different taxpayers, and the determination of what rate applies in different circumstances could be provided through regulations.
So just to be clear here, Julie, you used or Ms. Zerowitz, you used the statement using this clause. You mean the clause that's already in the bill, or
yes,
the clause that Mr. Saint-Marie is adding? You're saying it's already in the bill, you don't need the clause. Is that what I hear you saying?
That's exactly right. The number K, the number K that's on page 30.
Mr. Saint-Marie.
Thank you.
Oui,
yes. Well, I'm very happy to hear that explanation, because from what I remember, when I asked questions about this specifically in the briefing sessions, that's not what I had understood. So, Mr. McGowan, if you assure me that the minister has the authority to do it in C30 as written, to say, for example, the tourist industry is having problems, so for them we will leave the wage subsidy at the same level, and for the restaurant sector and for the hotel sector, for in the Maritimes, if you tell me that the minister does have this power as the document has been drafted, which isn't what I'd understood in the information sessions, so then I can withdraw my amendment. So I would just like to have confirmation on your part. Thank you.
Mr. McGowan.
Thank you. Yes, that was absolutely the intent behind the drafting. I've explained the rationale for why the specific wording was changed. I would note that we have heard from different industry groups a request to extend the wage subsidy beyond the end of November based upon the different recovery rates for different industries. So for example, one industry might need longer to recover, and that would be beyond the end of November, and that is not provided. So this would allow for rates to be set for the last 2 qualifying periods, but the wage subsidy could not be extended past the end of November without returning to Parliament.
Okay, that was my understanding as well, Gabriel, because we are getting a lot of pressure from the tourism industry. Maybe we need and that was my understanding, as Mr. McGowan said. So you're withdrawing BQ3?
Yes, thank you.
NDP 9-1, Mr. Julian.
Thanks very much, Mr. Chair. This should not be controversial at all. What it does is oblige the Minister of Finance to prepare a report on proposed measures to prevent publicly traded companies and their subsidiaries from paying dividends or repurchasing their own shares while receiving the Canada Emergency Wage Subsidy for the period that is after the tabling of the report under subsection 32.2. and recover wage subsidy amounts from publicly traded companies and their subsidiaries that paid dividends or repurchased their own shares while receiving the Canada Emergency Wage Subsidy for the period that is before the tabling of the report under subsection 32.2. This is basically asking the Minister of Finance to do the work to ensure that we know to what extent this was a problem. The government still has not released those figures, and what measures they would take to recover those amounts. So this should pass unanimously. This shouldn't be controversial at all. I fully expect all members of the Finance Committee, given that we are aware of the extent of the problem, would want to see the Minister of Finance present both the report but the solutions as well to this problem.
All right. Is there any discussion on this? I don't see. I got to get my screen up here and my bill down. Is there any discussion on this point?
Division.
Does NDP 9-1 carry on division?
Terrific.
No, recorded vote.
Okay, there we go. Carried on division.
Hold on.
Point of order, Mr. Chair?
Point of order,
What?
yes.
I think Ed was calling for a recorded vote, actually.
Oh, he was calling for a recorded vote. Okay.
Yeah,
All right. I thought him shaking his head.
No. I wanted clarity here, Mr. Chair.
Okay.
We have an amendment that has been brought forward.
Yep.
And we are voting on it, correct?
We can, if that's what you want to do. I had taken it carry on division, but my mistake. We will go to a vote.
Thank you.
So, Mr. Clerk, if you could poll the committee.
Ms. Derowitz,
Yes.
Mr. Fragiscatos,
Yes.
Mr. Fraser,
Only because of Peter's incredible advocacy, yes.
Ms. Koutrakis.
Thank you.
Yes.
Mr. McLeod,
Yes.
Mr. Falk,
No.
Mr. Fast,
No.
Ms. Jansen,
No.
Mr. Kelly, Mr. Kelly.
He's muted.
Sorry, I had a problem there for a moment. No.
Monsieur Sainte-Marie,
Oui.
Mr. Julian.
Oui.
Yeas pour 7, 7, nays contre 4, 4.
All right. The amendment is carried. Then coming to clause 24 as amended. Anybody want to speak? I see Ed Fast. Clause 24 as amended. Go ahead, Mr. Fast.
Yes, thank you, Mr. Chair. The only question I have on 24 is the Canada Recovery Hiring Program. I did follow some of the debate in the House on the Budget Implementation Act, and I felt that there was a lot of ambiguity and uncertainty about how the transition between the CEWS program and the new hiring program would take place. And I think for the purposes of clarity for anyone watching these proceedings, I would ask that Mr. McGowan perhaps just give us just an overview of how Canadian businesses will be weaned off the CEWS and brought over to the new hiring program.
Thank you for the question. I'd be happy to it. Mechanically, the rules, the operation of the rules, I think are fairly simple, in that you have both the wage subsidy and the new recovery subsidy that exist in tandem for a number of qualifying periods as the wage subsidy rates are being transitioned down. What the rules do is they provide that when you make your application, if whichever one of the two subsidies gives you the better result, you get. So if you would get more money under the wage subsidy for a particular period than under the recovery subsidy, then you qualify for the wage subsidy, and the reverse is true as well.
Answer your question, Mr. Vast?
Yes, it does.
All right. Then moving to clause 24 as amended on division.
Could I ask one more question?
So, yeah, you can add. Do you want to vote on it first and then ask your question, see as we call the question? On division? Okay. Ask your question, Tamara.
Okay. I was just wondering, I believe that I was talking to the restaurant industry and they were saying that they would actually require to be able to have both running at the same time, in the sense that it's going to take them much longer to recuperate. That's not what this is saying, correct? One will stop, the other will begin. Is that correct, Mr. McGowan?
Both the wage subsidy and the recovery subsidy will exist at the same time for a number of periods.
You can't pull at the same time, correct? You cannot pull from both at the same time, or can you?
No, you can't. You get the greater of the two, but not both.
Thank you.
Okay, that's pretty clear. Now there is no amendments from clause 25 to 99. Do we have unanimous consent to see them on division or not? Okay.
No, I think I thought we wanted a brief explanation on each clause.
Okay, then clause
30-second explanation.
Well, I just thought somebody might have looked ahead and said, look, we got no questions, and that we'd be able to move them all at the same time. So clause 25, I believe, is it still Mr. McGowan who's on this? I get my bill up here. Go ahead, Trevor.
Yes, it is. Thank you. Clause 25 is a consequential amendment on the employee stock option measure, and it specifically relates to the calculation of foreign tax credits and deductions you're allowed to take. So it's a consequential amendment for employee stock options.
On division?
On division.
On division 26. Trevor?
Clause 26 relates to the foreign affiliate dumping measure. The main measure amends Section 212.3 of the Income Tax Act and comes later. This deals with a specific case where a tax avoidance strategy could be used to affect foreign affiliate dumping through the use of a foreign corporation that immigrates to Canada. So it's consequential to the main foreign affiliate dumping changes. And it applies specifically in the case of corporate immigration, where they try to achieve the same tax results.
On division?
On division.
26 on division. 27. Trevor again.
Clause 27 relates to the allocation to redeemers method measure that relates to certain mutual fund trusts. The mutual fund trust industry has developed over the last several years methodology for avoiding double taxation, where they have redeeming unit holders. some planning had evolved in order to achieve tax deferrals or recharacterization benefits through the use of this methodology, and so this measure would prevent the use of this allocation redeemers methodology, which is intended to prevent double tax, from providing tax benefits.
Mr. Chair?
Yes, go ahead, Ed.
Yeah, just the term redeemer and recharacterization benefits, if Mr. McGowan could just explain what those are.
I would be happy to do so, thank you. Sorry, I'm trying to balance going quickly with providing a full explanation, and it is a complex measure. So a mutual fund trust is a trust with a number of unit holders, and those unit holders can achieve liquidity, which is to say, sell their investment or change their investment for cash, either through selling them in the market or through a redemption of their units. So they can tell the mutual fund trust, hey, I'd like to redeem some of my units. They currently have a net asset value of X dollars, and I can redeem them for that. And so when a unit holder redeems their units of a trust, they can be taxable on a gain themselves based upon their disposition of their trust units. And then the mutual fund trust itself will have to sell off some of its investments in order to refund the redemption. And so they can have capital gains or ordinary income triggered in the mutual fund. And so the allocation to redeemers methodology is used in order to allocate some of the gains realized by these trusts in order to fund redemptions out to the unit holders to avoid double tax. So the trust and the unit holder aren't taxed on the same economic thing. Where the tax planning occurs is some of the trusts were allocating more than was required in order to fund the redemption, which through the specific mechanism of the tax rules would provide a deferral benefit in certain cases, and also realizing ordinary income in order to have ordinary income in the trust that's effectively taxed at capital gains rates for redeeming unit holders. And so this would ensure that methodology can be used in order to prevent double tax. So when I redeem some of my units of my investment fund, there's not two incidents of tax on it, but would prevent some of the tax benefits that have developed.
Thank you.
Okay, I see Mr. Lawrence has his hand up, and we are on page 46 of the bill for those that are following. Mr. Lawrence.
Thank you. Just a quick question for Mr. McGowan. Is that what's commonly referred to within the industry as corporate class funds? Is that what this is meant to deal with?
No, corporate class funds are a different thing, and they relate to. There was a budget measure a few years ago relating to them. This measure relates primarily to mutual fund trusts. Corporate class funds, or switch funds, I think, as it's used, relates to mutual fund corporations, where you have a mutual fund corporation, which is a similar type of flow-through vehicle to a mutual fund trust, but they have classes of shares instead of just one type of units. And so one mutual fund trust can have several different classes of shares, each class of those shares tracking a different investment portfolio in the mutual fund trust. And I think that's generally what's referred to as corporate classes.
Okay, shall clause 27 carry on division?
Division.
28, back to you, Trevor.
Clause 28 relates to the tax deferral for patronage dividends. Those are dividends that can be paid out of certain agricultural co-ops to their members. And what it would do is extend an existing deferral that allows them to avoid immediate taxation, which can help with cash flow for these agricultural cooperatives.
Shall clause 28 carry on division?
On division.
29, if you have a short explanation there, Trevor.
Clause 29 is a consequential amendment relating to employee stock options, and it deals with a very technical issue between the interaction of a rule in section 143.3, which is an anti-avoidance rule, and it ensures that doesn't prevent the deduction provided for employers under the new stock option rules.
Clause 29 carry on division?
On division.
Clause 30.
Clause 30 relates to employee life and health trusts. And and in particular, the migration from the former health and welfare trust regime into the new legislated employee life and health trust rules in the Income Tax Act. So it provides a path for the old health and welfare trusts to transition over to the new employee life and health trust regime.
Shall clause 30 carry on division? On division.
On division.
31.
Clause 31, with apologies, I'm scrolling as well, relates to, that's a consequential amendment relating to
the RRSPs.
That's right, it's consequential on the change to the basic personal amount. And how that factors into RSP computations.
Ed, did you want to make a point?
No.
Okay. Clause 31 carried on division.
On division.
Yes, it's hard keeping up with that scrolling, Trevor. I'm having a hard here myself. Go ahead, 32.
Also with 31, it provides a rule on advanced life deferred annuities and transfers with RRSPs as well. Again, many of these clauses touch on different measures, but it's a consequential amendment for the ALDA, or advanced life deferred annuity rules. 32 is another consequential amendment or rule relating to advanced life deferred annuities, but in the registered retirement income fund context.
Clause 32 carried on division?
On division.
Clause 33.
Clause 33 relates to the measure extending the disability savings plan rules, or registered disability savings plan rules, where you have an individual who ceases to be eligible for the disability tax credit, and providing more flexibility and a plan to be kept open.
Shall clause 33 carry on division?
On division.
On division. 34.
Clause 34 provides the main set of rules relating to advanced life deferred annuities, and these are new investment vehicles that would help individuals provide for retirement, and also ensure that they don't outlive their savings.
Shall clause 34 carry on division? On division.
Division.
35.
Clause 35 is it contains a consequential amendments relating to advanced life deferred annuities and transfer rules with respect to registered pension plans, RSPs, and deferred profit sharing plans.
Carry 30. Shall clause 35 carry on division? On division.
On division.
36. We're about page 60 in the bill there. Anybody who's looking?
That's right. It's at the bottom of page 60. So clause 36 provides additional consequential rules in respect of advanced life deferred annuities.
Shall clause 36 carry on division? Okay.
On division.
37.
Clause 37 again provides a consequential amendment relating to advanced life deferred annuities.
On 37 carry on division?
On division.
On division. 38.
Clause 38 as well provides consequential amendments for advanced life deferred annuities in the pooled registered pension plan context.
Shall clause 38 carry on division? On division?
On division.
Clause 39.
Clause 39 provides amendments to section 149.1 of the Act, which provides rules for registered charities as well as qualifying journalism organizations that are the types of not-for-profit journalism organizations that are allowed to issue tax receipts for donations received. So there are two measures. One is consequential amendments relating to journalism, but mainly the amendments relate to amendments that apply to charities, and especially in the context of listed terrorist entities, ensuring that as soon as a charity becomes a listed terrorist entity, its charitable registration is revoked.
Wonderful idea. Carried on division? On division?
On division.
Clause 40.
Clause 40 provides, right, so Clause 40 has amendments to Section 152 that provide for the normal reassessment periods. One provides references to the consequential amendments in respect of the wage and rent subsidies. Another amendment relates to one half of the transfer pricing measures. In that case, the transfer rate pricing rules in Section 247 of the Act deal with transactions between Canadian residents and non-residents, and the concept of transaction is at the core of those rules. And then the rules that provide for the reassessment period in respect of transactions with non-residents that apply in the transfer pricing context used a different definition of transaction. So this is just ensuring that the terms that are used in Section 152 line up with their subject matter in the transfer pricing rules in Section 247.
Mr. Fast.
Now, Mr. Chair, if anybody was watching this and listening to this discussion and that explanation, they'd be scratching their head. What are transfer pricing rules? Transfer pricing has to do with, it's another tax avoidance opportunity that our tax system tries to address. But I would appreciate Mr. McGowan perhaps explaining more, just a little bit more depth, what transfer pricing is and why we have measures in the Income Tax Act to address it.
Thank you. I would be happy to do so, and appreciate the question. As I said, trying to balance brevity with the need to provide information. This really is more of a technical change, and the broader transfer pricing changes are to come later, but I can speak to it right now. So transfer pricing refers to the prices charged between non-arm's length parties across borders. So when a Canadian company transacts with a non-arm's length foreign company, the transfer pricing rules essentially require those transactions to be on arm's length terms, which prevents, as was suggested, the shifting of funds outside of Canada, in our case, in order to avoid tax. And so that, and where the transfer pricing rules apply and they require repricing or recharacterization of the transaction, then they can set the prices or the elements of the transaction to be what would be entered into between arm's length parties. So it essentially provides that in cross-border transactions between non-arm's length parties, they enter into the transactions on arm's length terms, so reflecting ordinary commercial arrangements. And this amendment is a highly technical amendment and does reflect a bit of an oddity in the rules that currently exist, where the term transaction is used in Section 152, which deals with normal reassessment periods, which is how long after the end of your year does the Canada Revenue Agency have to assess you. And those rules talk about transactions. They use the word transaction in the context of setting when the CRA can assess transfer pricing transactions, but the transfer pricing rules actually have a very specific definition of what is a transaction. And so what this would do is that it ensures that when we're talking about the reassessment rules, or when we're talking in the reassessment rules about transfer pricing, we're using the right terms and we're using the word transaction consistently.
Okay. Shall clause 40 carry on division?
On division.
Clause 41.
Clause 41 is a consequential amendment relating to advanced life deferred annuities.
Shall clause 41 carry on division?
On division.
On division. Clause 42.
Clause 42 is a consequential amendment relating to the journalism measures, and in particular, the extension of the journalism labor tax credit to partnerships. Or I shouldn't say the extension of it, but the provision of rules that clarify how the labor tax credit is intended to apply where a partnership is carrying on the journalism activities. And it relates to installments, but it's consequential on that change in the journalism rules.
Shall clause 42 carry on division?
On
sorry,
division?
Ed, didn't see your hand. Yeah, it's on division.
On division, I just wanted to make the point, Mr. Chair, that Mr. McGowan has been in the seat now for a fair bit of time. He's rendering yeoman service and providing excellent information. I very much appreciate that. He may want to have a break.
Well, if he's going to take a break, we're going to move on to a section he's not responsible for, because we're going to keep going until as long as we can. Mr. McGowan, do you want to take a break? If you do, we'll go to Part 4, Division 1. If you're thinking you okay?
No, thank you for the consideration and the offer, but I'm happy to continue.
Okay.
All right.
So clause 43.
Clause 43 is a consequential amendment relating to the introduction of the new Canada Recovery Hiring Program. It provides penalties for false statements, omissions, and non-compliance, and it adds cross-references so that those penalties can apply where there's non-compliance with the new recovery benefit.
Okay, here, clause 43 carry on division?
On division.
Clause 44.
Clause 44 is another set of consequential amendments. They deal with refunds of taxes, which is relevant in the context of certain refundable tax credits, and they add new cross-references just to measures under the Canada Canada Recovery Hiring Program that's been introduced, as well as the new journalism measures. So they provide needed cross-references in respect of other measures.
Okay, shall clause 44 carry on division? I see no questions. Carried on division. Clause 45.
Clause 45 relates to the measure we discussed earlier relating to the revocation of qualified donee status for charities that become listed terrorist entities, and it provides for the actual revocation mechanism.
Clause 45 carried on division?
On division.
Clause 46.
Clause 46 relates to the Qualified Canadian Journalism Organization rules, and specifically it provides a specific set of rules for becoming and losing your designation as a Qualified Canadian Journalism Organization, which is relevant to the labor tax credit, digital tax credit, and qualified donee status supports for journalism.
Clause 46 carry on division? On division. Clause 47.
Clause 47 is a consequential amendment relating to the measure that requires registered charities to lose their charitable status once they become listed terrorist entities, and it provides a year end on revocation. And it also provides another consequential amendment in respect of that charity measure, which provides that a charity can lose its registration status where it makes false statements in order to maintain its registration. Currently, a charity can lose its charitable registration status when it makes false statements in order to obtain registration as a qualified donee. and this measure would extend it so you can lose your status if you make false statements to maintain it as well.
Shall clause 47 carry on division? On division? Okay.
On division.
Clause 48.
Clause 48 relates to the advanced life deferred annuities and provides the bulk of the rules in respect of those, which as I noted, are a new type of investment vehicle that can provide additional flexibility in saving for retirement.
Mr. Chair?
Yep.
I'm looking at clause 48, and it relates to the notice of suspension of authority to issue receipts. Are we on the same clause?
I apologize. That was my mistake. I described 48 along with 47. So 47 is just the notice of revocation for becoming a less terrorist entity, and 48 is where you make a false statement in order to maintain your registration status. Right. Sorry, I
no problem. No problem. You're doing your best.
Thank you for that, Trevor. Shall clause 48 carry on division?
On division.
Division. 49.
'49 provides the rules for advanced life deferred annuities, which provide additional flexibility for savings in retirement.
Shall clause 49 carry on division?
On division.
Clause 50.
Clause 50 provides rules relating to the transition from the old health and welfare trust regime for providing benefits to employees to the new legislated employee life and health trust rules.
Okay, yep. Shall clause 50 carry on division?
On division.
On division. Clause 51.
Clause 51. Okay, so it relates to the repayment of certain COVID-19 benefits. If a benefit is received, it's generally included in your income. If you have to repay them, the general rule is you get a deduction for the repayment in the year that the repayment is made. This measure would allow for deduction in the year when the benefit or the COVID-19 benefit is received rather than the year in which it's repaid. And that can help offset the income with the deduction both for cash flow benefit purposes, and also it can help in later circumstances where, in the later years, the individual who received the amounts doesn't have any taxable income to utilize the deduction.
Shall clause 51, Mr. Fast.
Yeah, I'm just wondering who would qualify for this beneficial tax treatment? Could you give us a scenario?
If I, for example, received one of the listed COVID-19 benefits, the CERB, and I applied for it, I wasn't entitled to receive it, and I have to pay back some portion of it, or if it's an income tested benefit, maybe my income was a bit higher and I had to repay back a portion of it. So then I receive an amount in, say, 2020, I repaid in 2021, and then both the income inclusion and the deductions would both be in 2020, so it becomes a wash.
Okay, when you say I, though, this is related to flow-through shares. So we're talking about a corporate entity, correct?
Clause 51?
1, tax on flow-through shares. Am I on the wrong clause here, Mr. Chair? We're on clause 51, correct?
We are on clause 51, and we're on page 72, I believe.
And my information says this has to do with COVID-19 tax on flow-through shares.
Expenses deemed, I have a COVID-19 expenses deemed incurred earlier. If you go down on that page a little bit.
I apologize. I confused it with a different measure. You're absolutely correct. So flow-through shares, when you enter into a flow-through share agreement, you have a certain amount of time to engage. Stepping back a bit, flow-through shares allow resource companies to raise money more effectively by effectively transferring some of their qualifying expenses, like Canadian exploration expenses and development expenses, to their investors who can use the deductions. And so when you enter into a flow-through share agreement, the corporation is required to incur those expenses within a fixed period of time. What these rules do is they provide essentially an extra year for the company to incur those expenses. And that's in response to the COVID-19 pandemic, which prevented a lot of companies from engaging in their normal in the normal exploration activities.
Okay. Clause 51, carry on division. Ed, you still got your hand up.
Oh, sorry. On division.
On division. Clause 52. Is that the one you previously explained?
No, that again, I apologize. I saw the heading and was scrolling a bit too quickly. But clause 52 relates to a measure that prevents the avoidance of withholding tax in respect of securities lending arrangements. So securities lending arrangements are fairly common and provide liquidity in the securities markets, where I might have a number of shares of a company. I can lend them to a counterparty and take them back at a future time. That can help facilitate things like short sales and provide liquidity in the market, as well as serve as a form of financing. And what the securities lending rules basically try to do is that if you're in a securities lending transaction, it puts you back in the same place as if you'd never legally disposed of the securities that were lent. And the securities lending rules, there was a planning that had developed that allowed entities to be able to avoid withholding tax on amounts paid by a Canadian resident to a non-resident through the use of securities lending arrangements, or what are called broken securities lending arrangements, because how it worked was they technically avoided the definition by not qualifying. So this essentially closes that loophole and ensures that withholding tax applies appropriately. I should also note that there's a relieving aspect to it, in that it removes the withholding tax obligation for the Canadian entity where the underlying share, so the share that's being lent, is a foreign share that would not normally attract Canadian withholding tax. So it has those two relieving and tightening aspects, but it in this essence make sure that the securities lending rules work appropriately in the context of Part 13 withholding tax.
Mr. Fast, your hand up.
Yes. I believe Mr. McGowan was addressing the securities related aspect to this particular clause, but the first part of it has to do with withholding tax with respect to non-residents and presumably income received out of an advanced life deferred annuity, which is a little different than the securities arrangements he was talking about. Can you comment on that?
Oh, right. That's absolutely correct. As was noted earlier, many of these clauses have several components to them. So the securities lending rules, the bulk of those are in Clause 52, but it also contains a consequential amendment relating to the advanced life deferred annuity rules, where you have payments to a non-resident in respect of an ALDA. So this is just a consequential amendment adding those to the Part 13 rules.
And that's to make sure that non-residents don't get away without paying their fair share of tax, correct?
I don't want to characterize it as an anti-avoidance rule, because of course people might invest in an ALDA and then move south for the warmer climate or what have you. but it ensures that when you have payments going to a non-resident, that they're not free of Canadian tax.
Well, it's not tax avoidance, it's actually outright tax evasion not to pay your taxes. And the 25% withholding tax, I understand, is there to make sure that the government gets a chunk up front while the actual tax liability is being determined. Correct?
Well, Part 13 withholding tax, it often serves as it is technically an income tax imposed on a non-resident in respect of a payment, generally passive amounts. And the 25% rate is the base rate, which can be reduced under tax treaties. And yes, obviously, if you don't report and pay your taxes, that can be tax evasion. But through a lot of these payments, the passive payments out of Canada to non-residents do attract this Part 13 withholding tax. This could be dividends, rents, royalties, payments in respect of certain tax-deferred vehicles, RSPs, and that's kind of how it's related, and it can be related to ALDAs that way. So it's a measure that ensures that the appropriate amount of taxes is being paid by non-residents, and the withholding mechanism on the payment of the amount can helps ensure that it's collectible when the money leaves Canada.
Clause 52, shall Clause 52 carry on division?
On division.
Clause 53.
Clause 53 amends Section 212.3 of the Act. That's the section that prevents the foreign affiliate dumping rules. These rules essentially apply to prevent money from being extracted from Canada free of tax, avoiding the withholding tax rules that we just discussed. Currently, the rules apply where a non-resident corporation controls a corporation resident in Canada, and this measure generally would extend the foreign affiliate dumping rules to apply also where a non-resident trust or individual controls the Canadian resident corporation.
Shall Clause 53 carry on division?
On division.
Clause 54.
Well, sorry, I'm just scrolling.
No, take your time, Teber. There's a lot of pages to that Clause 53.
Yeah, exactly.
As I noted, it changed the rules, so it's not just non-resident corporations, it's corporations or trusts. And so almost every measure in the foreign affiliate dumping rules had to be changed to say corporation or trust, which led to a lot of amendments in terms of pages for a fairly or not as significant of a change. Clause 54 is a consequential amendment relating to the foreign affiliate dumping rules. We talked earlier how foreign affiliate dumping can be used through an immigrating company, and this prevents that kind of planning being used in respect of an emigrating company under 219 under section 219.1.
Shall Clause 54 carry on division?
On division.
Clause 55.
Okay, Clause 55 relates to the measure allowing for electronic delivery of requirements for information. Currently, the Canada Revenue Agency can send to financial institutions requirements for information, but they have to be done by registered mail, and this measure would allow them to be done electronically in order to improve the efficiency of the process.
Shall Clause 55 carry on division?
On division.
Clause 56.
Clause 56, I'm just looking, is a consequential amendment on the measure we just discussed relating to electronic deliveries of requirement for information.
Shall Clause 56 carry on division?
Yes.
On division. Clause 57.
Clause 57 is another consequential amendment relating to electronic deliveries for filing, for electronic deliveries of requirements for information.
Thank you. Shall clause 57 carry on division?
On division.
On division. Clause 58.
Clause 58 is a consequential amendment, or not a consequential amendment. It is one of the package of amendments relating to the support for Canadian journalism that ensures that the rules work appropriately. And in particular, it allows the Canada Revenue Agency to provide the names of organizations that that have subscriptions that are qualify for the digital news subscription tax credit. So if somebody wants to know if the periodical or the that they want to subscribe for qualifies for the credit, then the Canada Revenue Agency would be able to provide that information.
Shall clause 58 carry on division?
On division.
Carried on division. Clause 59.
Clause 59 is a consequential amendment relating to the electronic delivery of requirements for information measure.
Shall clause 59 carry on division?
On division.
Clause 60.
Clause 60 provides the more significant amendment relating to transfer pricing. As we've discussed, transfer pricing refers to the prices charged in cross-border transactions between non-arm's length parties. When those rules apply, they essentially can reprice or recharacterize transactions to be in accordance with arm's length terms and conditions. And so what this measure would do is it would clarify the interaction between the transfer pricing rules on the one hand and the other rules in the Income Tax Act on the other hand, so that it's clearer how the norm or the rest of the rules in the Income Tax Act work once there's been a transfer pricing reassessment. So, for example, if I pay $100 to, or if a Canadian company pays $100 to a foreign non-arm's length party, and an arm's length price for that widget would have been $60, then the price of the price paid for the widget under the cost of goods sold for the Canadian company would be reduced from $100 to $60, and then it tells you to plug that $60 into the rules in the other act in order to determine your tax liability. So it clarifies the interaction between the transfer pricing rules and the rest of the rules in the Income Tax Act to allow for transfer pricing to come first.
Thank you, Trevor. Mr. Falk.
Thanks, Chair. Yeah, and Mr. McGowan, exactly on transfer pricing like that, who determines if it's market value or if it's not? How is that determination made? Is there a calculation or formula?
Thanks for the question. It's a fairly complex determination. The rules in the Income Tax Act are actually not that long, but there's a tremendous amount of guidance done through the Organization for Economic Cooperation and Development, transfer pricing guidelines put out by the Canada Revenue Agency. Ultimately, the Income Tax Act essentially provides that you have to use arm's length prices, and then there's a broader mechanism that's used for determining what those arm's length prices are. So, for example, companies are required to have their contemporaneous documentation in order to establish how they came up with their arm's length prices. And so your companies engaged in cross-border transactions will usually or often keep that kind of contemporaneous documentation showing their transfer pricing methodologies. The Canada Revenue Agency can, of course, come in and challenge whether or not the transfer pricing was done correctly and whether the prices should be something else, which from that, of course, taxpayers can challenge an assessment of the Canada Revenue Agency, and it ultimately goes up to the courts to determine whether or not arm's length prices were charged, and if not, what the consequences would be.
Mr. St. Marie.
Oui, premièrement, merci beaucoup, Monsieur McGowan, pour tout.
Thank you, Mr. McGowan, for all of the information you're providing to us. It's very much appreciated. Do you have the number of taxpayers of companies that could be affected by this change and the amount of revenue that the revenue agency could get? Is there an estimation of that? Do you have that information with you? Thank you.
Thank you for the question. No, I do not have that information with me. I will say that this is not intended as a tightening amendment in order to, make the or in order to really change the outcomes of transfer pricing cases. Rather, it is intended as a clarifying amendment so that it's just much clearer how the transfer pricing rules interact with the other rules in the Income Tax Act. And so to that end, as it is intended to be clarifying, it's not expected to produce revenues, and so there's no revenue associated with it in the, for example, in the budget estimates. It is really intended to be a clarifying amendment. I would say that the government announced a consultation on the transfer pricing rules more broadly as part of Budget 2021, which could lead to more substantive changes to the transfer pricing rules, but that's not reflected in Bill C-30.
Merci beaucoup.
Thank you very much.
Shall Clause 60 carry on division?
On division.
Clause 61.
Apologies. Clause 61 amends Section 248 of the Income Tax Act. Section 248 contains the definitions that are relevant generally for the purposes of the Income Tax Act. And so there are several measures that are reflected in Clause 61. I'll go through each of them. The first measure relates to the definition of a derivative forward arrangement. These are arrangements that were popular a number of years ago that effectively sought, through the use of derivative financial instruments, to convert fully taxable ordinary income into capital gains, which are only half taxable, and also to defer the inclusion in income of those amounts. So it provided a deferral benefit generally for up to 5 years, and also recharacterization from fully taxable ordinary income to capital gains that are only half taxed. So in 2013, the government announced, or the previous government announced or implemented rules in order to prevent this type of derivative planning. A new iteration of the planning was recently developed that sought to exploit an exception to the previous rules. And what this measure would do is it would ensure that the derivative forward arrangement rules work appropriately to prevent this type of planning.
Mr. Fast.
Yes, Trevor, there are anti-circumvention measures within the Income Tax Act that allow the government to address unwarranted attempts to avoid tax, correct?
Yes, there are certainly anti-avoidance rules, and including the general anti-avoidance rule.
GAR, yes.
That's right.
Now, are they not broad enough to capture these constantly evolving efforts to avoid taxes?
I'd probably answer that in two ways. One is that not every GAR case applies the way that the Crown hopes, and so sometimes it's necessary to make these amendments as the result of a case where the GAR is found not to apply, but also in a lot of cases where the government spots a new type of planning that's being used to exploit the current rules. Amendments are made before the general anti-avoidance rule has been applied and litigated, because that can take many years in order to work its way through or to be assessed and work its way through the courts. And during that time, there's a lot of uncertainty for taxpayers. And so what often happens is the government makes these amendments in order to use a colloquial term, close the loophole immediately to provide the certainty up front, and then can challenge the cases later in court.
That answer your question, Ed? Okay.
Yes, it does.
Shall clause 61 carry on division?
On division.
Okay, 62.
Clause 62 provides a consequential amendment related to the changes for the basic personal amount.
Okay. All right. Any further thoughts on that? Okay. Then shall clause 62 carry on division?
On division.
On division.
Clause 63.
Clause 63 is that's another consequential amendment that comes out of the advanced life deferred annuity or ALDA rules. And it relates to extended meanings of spouses and former spouses that can apply for the purposes of the ALDA rules. Or it extends the rules in 252 sub 3 to be available for the ALDA rules.
Okay. Shall clause 63 carry on division?
On division.
On division. Clause 64.
Clause 64 amends Section 260 of the Act, which is the rules dealing with securities lending arrangements. And I've already discussed this measure in the context of the Part 13 withholding tax rules in Section 212 of the Income Tax Act. And this provides the other portion of the securities lending arrangement rules that exist in Section 260 of the Act, which is where the securities lending arrangement rules work. So it relates to that measure.
Oh, no questions. Then shall clause 64 carry on division?
On division.
And just for those that are paying attention, in the bill, we just surpassed page 100. I know everybody likes to think in hundreds, so we're away. First century gone. Clause 65.
Thank you. I would perhaps a larger threshold is it ends part 1 of the Act, so I would turn that over to my colleague Pierre Marcel, who would be able to speak to part 2. So
Pierre, welcome.
Hi. So essentially 65, it's the same amendment that is found in clause 55 for the Income Tax Act. It's a consequential amendment, and it basically deals with the electronic delivery of information, a request for information to be delivered electronically to banks and credit union. I'm also going to add that clause 65 to 80, it's exactly the same thing as 55 to 57 on the Income Tax Act, but some amendment applies to the Excise Tax Act, the Air Traveler Security Charge Act, the Excise Act 2001, the Greenhouse Gas Pollution Pricing Act, which are all acts administered by the CRA. And since the admin rules in these acts are usually similar, CRA, when there's a change in one act, they want to change to all the acts to facilitate their administration.
Okay, don't see any questions. Shall clause 65 carry on division?
On division.
Clause 66.
Well, 66, like I say, 65 to 80, they're all the same thing. It's the electronic delivery of information. So I can repeat the same explanation if you want.
Okay, do we have consent to go from 66 to 80 with the same explanation and see them as carried on division?
No, I think just a short explanation for each one. That way our process remains the same. I do understand
Okay, it's a consequential. Okay, it's a consequential amendment to the income tax amendment in respect of the electronic delivery of the electronic requests of information to banks and credit unions.
Okay, shall clause 66 carry on division?
On division.
Clause 67, same explanation. Will it carry on division?
On division.
68. On division?
So just a very quick explanation. What is this clause?
So
yeah,
68 is basically a clause that allows CRA to make requests for information to banks and credit union in an electronic format. This was actually a request from banks and credit union because receiving paper was like, they found it was not very efficient. And now they'll be able to receive it electronically through a direct pathway with CRA.
See, Mr. Chair, that is very helpful. I appreciate that kind of an explanation.
Shall clause 68 carry on division?
On division.
Oh, sorry. Hold it. Mr. Lawrence.
Yeah, it can go on division. I just Monsieur Pierre. You're popping a little bit, so I was wondering if you could move your microphone up just a little bit, just popping there a little bit. Perfect. It was keeping Wayne from wake, so we're trying to.
Okay. Sorry about that.
Shall clause 68 carry on division?
On division.
On division. Clause 69. Is there anything further on this one that can be added?
No, this is just a consequential amendment to those electronic delivery of requests for information.
Okay. Shall clause 69 carry on division? And Philip, your hand is up there. I don't know the intended to be.
No, my apologies. I'll put it down.
And not a problem. We all do it. Okay, carried on division. Shall clause 70.
Same explanation.
Same explanation.
Yes. Well, hold on.
Okay.
For clause 69 was about a time period not to count. So we got sort of an explanation on that. Clause 70, like what is it? Just tell us.
Clause 70, Michelle.
Yeah. So essentially, this is the same thing. Is that like CRA will be able to require some information in an electronic fashion for banks and credit unions.
Okay.
Satisfied? Yep. All right. Shall clause 70 carry on division?
On division.
Clause 71, Marcel?
Yeah, so 71 it's a consequential amendment to the amendment that is found in the Income Tax Act in this bill, and essentially is that it's you see the title is called Proof of Electronic Delivery. So usually it was served personally, so there was a paper trail. So in this case, like a CRA official could be able to provide, the electronic copy of the message that was sent to the bank or credit union to prove that it was sent.
All right. Shall clause, Mr. St. Marie.
Oui, merci.
Yes, thank you. I apologize for interrupting like this. My question is about certain sections, certain clauses. Since the beginning, we see that it's only the English that's amended in the Act and not the French. For example, in clause 70 if I'm correct, is the French version of the Act already correct with what's asked to be specified in the English version? Why is it only in the English version? Thank you. In this case, the French and English versions in the previous versions had the same system, but sometimes the French and the English were written differently. Sometimes there's a lot more words in French than in English. So the legislative drafting principles that the Department of Justice wants us to use doesn't ask us to open up a whole provision if it's very long, to change the whole provision if there's just a little change at the beginning and at the end. They ask us to do separate amendments. And in this case, that's probably what happened, because that's often what happens in this case. It's just the structure. The sense of the provision is different, but the way it's written is a little different. Okay, I can understand that. But the French version is just as detailed and as specific as the English. Yes, yes. Very well, thank you.
Okay. Shall clause 71 carry on division?
On division.
On division. Clause 72.
So clause 72 is the similar amendment, identical amendment, consequential to the amendment in the Income Tax Act. But in this case, it's not the Excise Tax Act, it's the Air Traveler Security Charge. So it's to allow CRA to deliver requests for information in an electronic format.
Okay. Seeing no hands, shall clause 72 carry on division?
On division.
On division. Clause 73.
So 73, again, it's the consequential amendment to the Air Traveler Security Charge, consequential to the amendment to the Income Tax Act, to the electronic delivery of requests for information to banks and credit unions.
Thank you.
Okay, that sounds good. Shall clause 73 carry on division? On division.
On division.
Clause 74.
So clause 74, it's again a consequential amendment to the Income Tax Act in respect of the electronic delivery of requests for information. But in this case, it's for the Excise Act 2001. Usually under this, it's the tobacco taxation, alcohol taxation, cannabis taxation.
No hands. Shall clause 74 carry on division?
On division.
Clause 75.
75 is the same explanation. It's consequential to 74. That is consequential to the income tax amendment.
Shall clause 74 carry on division?
On division.
Oops.
Of 75?
I see the 75. Yeah. 75. Sorry, I was looking at the wrong number. Circled the wrong one. Yeah. 75.
On division.
Obviously, the legislative clerk is paying attention because he put his hand up and he said, "Smarten up, Mr. Chair." Shall clause on clause 76 then?
So 76 again is a consequential amendment under the Excise Act 2001 to the for the electronic delivery of requests for information that is consequential to the amendment to the Income Tax Act.
Shall clause 76 carry on division?
On division.
Clause 77.
77 again is the same thing. It's consequential to the amendment to the Income Tax Act. In this case, it's how the CRA can prove in court that the electronic request for information was sent.
Shall clause 77 carry on division?
On division.
Clause 78.
So 78 again is a consequential amendment to the Income Tax Act, but in this case, it's the rules under the Greenhouse Gas Pollution Pricing Act. And just, by the way, just part one of that act, which is the fuel charge.
No questions on that. Okay. Shall clause 78 carry on division?
On division.
On division. Clause 79.
79 is consequential to 78. That's consequential to the income tax amendment. Again, in respect of the electronic delivery of requests for information to bank and credit unions.
Did you say 78 or 79, Marcel?
I think we were at 79.
Yes.
Yeah, no, we were. No, I thought you said 78. Okay.
No, I just said it was consequential to 78.
Okay, all right. Shall clause 79 carry on division?
On division.
Okay, shall clause 80. What about clause 80?
So 80 is again, it's the same thing. It's consequential to income tax amendment, and this is the rule that explain how CRA will prove that the electronic request was sent to the particular bank or credit union.
No hands. Shall clause 81 carry on division?
On division. And Mr. Chair, I would add, this is probably the most consequential group of clauses we've ever debated. Mr.
Chair. 80, right?
That's right, 80.
Yeah. Shall on clause 81?
Well, I hope Mr. McGowan didn't go too far because these are income tax regulations, so it would be for him to explain this. But I'm not sure if he left. So 81 to 99 is actually income tax.
That's right.
Okay, Mr. McGowan, are you not too far away?
No, I would be happy to take up the discussion.
Oh, I got the bill up on part of my screen, so I can't see it. Sorry, Trevor. So go ahead on clause 81.
Clause 81 amends the income tax regulations. This is a consequential amendment relating to the advanced life deferred annuity measure, and it amends the a definition of remuneration consequential on amounts being included in income in respect of the ALDAs for a paragraph of the Act. But it's a consequential amendment relating to advanced life deferred annuities.
I don't see any hands, Trevor. So shall clause 81 carry on division?
On division.
Division. Clause 82.
Clause 82 relates to is a consequential amendment following the increase to the basic personal amount, which is now split into two parts: the base of the basic personal amount plus the additional amount, and this is added to add a reference to the amount determined to add a reference to the new additional amount consequential, and the basic personal amount changes.
No further questions. Shall clause 82 carry on division?
On division.
Clause 83.
Clause 83 is a consequential amendment or consequential changes for the advanced life deferred annuity measures relating to disclosure requirements in respect of an ALDA.
I don't see any questions on that. Shall clause 83 carry on division?
On division.
Clause 84.
Currently, the tax rules provide for an accelerated deduction in respect of certain zero emission vehicle properties, and these amendments would extend the class of vehicles eligible for the enhanced zero emission vehicle deduction. It would include things like off-road vehicles, but it would extend the capital cost allowance or tax depreciation deduction.
Ed, you look like you got a question. Mr. Falk.
Yeah.
Yeah, thank you. By off-road vehicles, are you referring to recreational vehicles, heavy equipment, or agriculture vehicles? What would you be referring to there?
Well, there are requirements that need to be met, and one of the existing prohibitions was that they had to be driven on a road. I don't think there are distinctions made between types. I don't know in terms of the specific technologies and types of vehicles. Is my colleague Maud Lavoie able to join in, or maybe Dave Bohm, who worked on the file?
Maud or Dave?
Just a second, I'll let them in, sir.
Yeah, good, not a problem. And then Mr. Fast after this. I know there's only 65 folks sitting in the wings there while we go through this process.
Yeah.
So thank you all for your patience. Dave Bowling, go ahead.
Hi there. Yeah, I'm happy to help out Trevor. It's been a long haul. So the types of vehicles, we have a few examples that we've given in the clause by clause description. I'll just quote from it. I'm not an expert in this technology, but what we talk about are, and these are items that go into class 56 of the income schedule 2 to the income tax regulations. We talk about notable examples would be zero emission aircraft, watercraft, trolley buses, and railway locomotives. But I am aware that some of the large equipment used in mining, I guess, would also potentially be fully self-propelled and fully electric.
Do I get a follow-up?
Yeah, sure, Ted, go ahead.
You mentioned mining would probably qualify. I'm thinking particularly of agriculture. Would agriculture equipment also qualify? There's more and more energy efficiently produced agriculture equipment.
I see that Maud Lavoie has just shown up, so I don't want to steal her thunder. She knows more about this stuff than I do.
Miss Lavoie, you're away.
Yes. So yes, I mean, as long as the equipment is used is fully electric or using hydrogen, it could be equipment used in agriculture. It could be forklifts. It could be tractors. It could be zambonis. It could be golf carts. It could be equipment that meet the requirement in any industry. What we have heard from more is the mining sector that seem to have technology available and ready to be used. But any other industrial sectors could also qualify if they do use equipment that is fully electric or using hydrogen.
Thank you for that explanation.
Thanks, Ahmad. Mr. Fast.
Yeah, I think most of my questions have actually been answered. That was very helpful. Just to be very clear, this is a temporary enhanced CCA, which allows the capital cost to be written off in the first year. In other words, there's no schedule of write-off. It's 1 year. It's all written off in that year. Is that correct, Maud?
Yes, that's correct. And it's for equipment that becomes available for use before 2023. So it is temporary.
2023 or 2028?
Sorry, the 100% is until 2023, and then there's a phase out so that it will be then fully phased out by 2028.
Okay, that wasn't explained in my notes here, so thank you for that clarification. Appreciate it.
Anything further on this? Okay, shall clause 84 carry on division?
On division.
And thank you all three for your explanations there. Turning to clause 85.
Thank you. I would say, borrowing from my colleague Pierre's grouping, that clauses 85 through 87 are all consequential amendments relating to the measure that we just discussed.
So are we okay to see clauses 85 to 87 on division, folks?
No, I'd like to just very quickly walk through them.
Okay, on clause 85, consequential amendments to what was discussed. Do we see it on division?
On division.
On division.
Okay. Clause 86.
Could someone explain that?
Clause 86 is perhaps not the most intuitive measure, but what the new zero emission vehicle rules do is they create a new class for depreciable properties. Each type of depreciable property is arranged by class, and each class has its own depreciation rate. I say depreciation, but the technical term in the tax rules is capital cost allowance rate, but that's just tax depreciation. So it creates a new class 56, and there's an existing class 54, which is 56 for the new types of zero emission vehicles. Now, there might be some circumstances where a taxpayer may want to include one of those new vehicles in or something that would go into class 56 in another class for various reasons, and this would provide the flexibility for a taxpayer to elect out of the property being included in this new class, where it might also qualify for another class.
Very interesting. Thank you.
Okay. Shall clause 86 carry on division?
On division.
Division, clause 87.
Could someone explain accelerated investment incentive property?
My colleague Mo described the accelerated investment incentive, and broadly speaking, that's a measure that was recently introduced. It's temporary, and it's phasing out. That applies to most classes of depreciable property that's eligible for capital cost allowance. And in order to qualify for this accelerated depreciation or tax depreciation or accelerated capital cost allowance, certain conditions need to be met. And some of those, for example, relate around buying used property or buying property from non-arm's length persons in order to prevent kind of gaming of the tax deduction system. So the definition of accelerated investment incentive property is just the types of property that can qualify for this new enhanced capital cost allowance deduction.
Okay. Mr. Falk, did you want in?
Yeah, please. Thanks, Mr. Chair.
And I was just wondering myself, Trevor, what's the percentage on the CCA?
The general rule for capital cost allowance is that the CCA rates track the useful life of the asset, and so the rate that is associated with any asset will depend on how long it's expected to last. So the rate on a building would be lower than the rate on a computer, for example. So and each one of these classes has its own rate, ranging from some very low, I think, down to 2% up to 100% capital cost allowance rates. What the accelerated investment incentive does is that it increases the rate that can be taken, and allows more deductions to be taken earlier in a lot of cases, in addition to the base rate that basically reflects the useful life of the assets.
Thank you, Ted.
Okay, thank you, Chair. Yeah, Mr. McGowan, for subsection 2 there, is it talking about a situation where a piece of property would be purchased and then deducted with the accelerated investment incentive opportunity and then flipped to another corporation, or that would do the same thing?
That was one of the concerns that led to the introduction of some of the non-arm's length restrictions that I mentioned. I can speak to what the specific amendment would do, and that's like currently, in order to qualify as an investment incentive property, which, as we discussed, is what gets you in the door for these enhanced deductions that let you take tax depreciation in excess of what's currently or the base rules. And right now, in order to qualify for this enhanced deduction, when it's acquired from a non-arm's length party, so a sister's corporation or something like that, the rules currently require that the property cannot have been used for any purpose before its acquisition, so it has to be new, and also that no other person or partnership could have claimed a capital cost allowance deduction or a terminal loss in respect of the property. So these two conditions have to be met currently in order for a property to qualify for the accelerated investment incentive. So what this amendment would do is that it would actually remove the first condition, so that there's no requirement that the property must never have been used for any purpose before it was acquired, leaving only the second requirement that nobody else have claimed a tax deduction on it. And so you can have a property, acquire it, use it, And because capital cost allowance deductions are discretionary, you might never, you don't need to take a deduction in the first year or any year really. So where you've acquired or a non-arm's length person's acquired a property, never taken any tax deductions on it, and then transfers the property to you, then the risk of that kind of game playing where multiple people are taking the accelerated deduction just isn't there. And so these would relax the rules for something to be an accelerated investment in property, so they're better targeted, where a non-arm's length person has actually started taking the deductions.
Okay, Ted. All right. Shall clause 87 carry on division?
On division.
Clause 88.
Clause 88 relates to the introduction of the new, we call VPLAs, variable payment life annuities, and these are investment products that that are being introduced that would provide additional flexibility for registered retirement vehicles and the kinds of investments that they could make in pensions and things. So it includes the introduction of these new VPLAs, or variable payment life annuities, and the rules relating to them.
Mr. Fast.
Yeah, you just answered my question. These would be an alternative to a RIF, is that right?
Not exactly. They're a specific type of annuity that can be held by certain plans. I should say that this is the first time that VPLAs have come up, although this is actually one of the consequential amendments. The main body of the rules are in 8506, and this is Regulation 8502. But it's a type of annuity that can be held by certain types of plans, as opposed to a new type of registered plan. I don't know if my colleague Max Baylor is here. He can provide a great deal more information on the design of VPLAs and how they work.
Because I think most Canadians are familiar with registered retirement income funds, RIFs, and that they have to start paying out at around age 71. This seems to be a similar vehicle, but I assume it is a response to changes in the Tax Act that enable a new product to be produced. Is that right?
These are changes to the tax rules that allow a new product to be provided to investors. As a response from stakeholder comments saying that such a thing would be useful. And again, if I don't know if Max is there, Max Baylor, he can provide more details.
If Max is there, you can come in, Max. But while we're waiting, we'll go to Mr. Lawrence.
Sorry, yeah, I just had a further question. Probably Max is better positioned to. I was just wondering how this. I'm guessing it's different than a life annuity, and I'm guessing by the definition it adds some variability to the payment schedule. And just for my colleague there, Mr. Fast, I believe these can be held in registered and non-registered environments, or just registered environments.
It would allow pooled registered pension plans, defined contribution registered pension plans to provide these variable payment life annuities to their members directly from the plan. Of course, I can go out and buy annuities or all sorts of derivatives, whatever I want, but this really relates to allowing these PRPP or pooled registered pension plans and defined contribution registered pension plans to offer these new variable payment life annuities. And the VPLAs provide payments that vary based on investment performance of the underlying annuities fund and the mortality experience of the annuitants. So that there's a bit more flexibility in what they can do than is currently provided. Oh.
I just got a note from the clerk. Mr. Baylor's not there, so we'll have to go with your answer, Trevor. Is there anything further, Ed, on that one?
Nope, that's fine. Thank
okay. Shall clause 88 then carry on division?
On division.
On division. Okay, no, I just had a note here. Shall on clause 89. Who wants to give a quick explanation, if you could, Trevor or one of your colleagues?
I'd be happy to do so. Currently, there are, excuse me. Currently, there are restrictions available on transferring benefits from a defined benefit registered pension plan to an RRSP of a former employee, and planning had been developed in order to circumvent these limits, wherein a former employee would set up their own individual pension plan and then have a transfer from the former employer's defined benefit registered pension plan to their new individual pension plan, thus effectively circumventing the limits on transfers to RRSPs. And what this measure would do is that it would help close those rules and ensure that the transfer limits work appropriately.
Okay, shall clause 89 carry on division? On division?
On division.
Clause 90.
Clause 90 is a consequential amendment, or provides consequential amendments related to variable payment life annuities. Or actually, no. This, as I mentioned earlier, this provides the main set of the rules, and the one I talked about earlier was consequential, but this relates to VPLAs.
Ed, you okay with that?
Not quite. This has to do with money purchase provisions, correct? Clause 90. Just define what those money purchase provisions are.
We're on.
I hope we're on the same clause.
We're at page 117.
I'm looking for the specific. I'm not sure of the question. I mean, if you look at the top of 118, that really starts to get into the body of the VPLA rules. The money purchase.
If you look at subsection 4, I think that's where it's identified, Mr. McGowan.
The BPLA fund, Ted? Yeah.
Yes.
BPLA fund, subsection 13, A, B, and C.
In terms of the specific pension rules, I just got an email from my colleague Max, who swears he is in the waiting room and eager to discuss these.
Just Mr. Clerk, see if you can get Max in here. Give Trevor a little break. And just to the translators, I know they're getting tired. We are going to give them a half-hour break at 7 o'clock your guys' time.
Mr. Easter, he should be on now. He's called Maximilian.
Maximilian, okay. Maximilian, I don't see you, but I got too many things on my screen here. Just speak when you're in here. We'll wait.
We promoted him to panelists, Mr. Easter, but we don't see him anymore. So.
and just give them another shot. Technology's so wonder, and we want the so wonderful. And
wow, this is taking a while.
It is, but this is technology. It's the internet speed you have out there in the West Coast there, Ed. That's the problem.
My internet speed is fine. We've got lots of broadband out here.
Yeah, I know you have.
The only thing I can suggest at this point would be that he disconnect and try to reconnect, and we try to promote him again to panelist. If he can hear me, or if Mr. McGowan can connect with him and ask him to try that.
Yeah, Mr. Trevor, if you could just tell him to reconnect, and we'll try and get him in.
I just sent him a note. So I can maybe just start to go through it until Max makes it on. I mean, he is the expert on pension rules. So as I said, Clause 90 relates to the introduction of variable payment life annuities. The money purchase provisions of these plans say, 8506 sub 1 sets out the permissible types of benefits that can be offered, and so E.1 just talks about retirement benefits other than benefits permissible under E.2. E.2 is a measure that specifically relates to VPLAs, and so it's just saying if you have a VPLA, don't look to E.1, look to E.2. Then Clause 2 introduces the basic rules saying that under these types of money purchase provisions, they can offer E.2 variable payment life annuities, and that provides the rules for them and kind of the conditions that need to be met for them to work.
Here we are. There's Maximilian. I see him in real life. Welcome. We've been waiting for you, sir.
Yeah.
Sorry about that. I'm not too sure I was there, and it wasn't activating.
Not a problem. Did you hear the question?
I'm not sure. I got kicked out, and I think I had to reboot to I guess that's how they got me in. But what I did hear the first one, so maybe I can pick up from there. Just a bit of a description. I did hear the question about whether this is sort of a riff and how it relates to that. So maybe I can start by answering that question, and we can then follow up from there. So the way these plans, these new VPLAs, these new variable pension life annuities, what they're meant is basically for defined contribution registered pension plans, as well as PRPP pooled registered pension plans. Currently, before the introduction of these rules, you basically had three options when you reached, as was mentioned, age 71 and had to sort of convert into a bit of a decumulation vehicle. First option is transfer to transfer your funds to an RSP or RIF, and that serves as a decumulation option. Second option, you can buy an annuity. Third option is basically you could stay in the plan and you can receive payments directly from your plan in retirement. However, when you stayed in your plan, you were basically sort of on your own. and you stayed in whatever the plan invested in for you and paid out. What the variable payment life annuity option does is it sort of adds another option where it lets you stay in your plan, but allows you to join a group of other members of the plan, and then you basically join a pool, and what that changes is it allows you to sort of pool the mortality experience of the different members. So you agree to sort of go into this pool, and then your payments both vary based on the investment, but also on the mortality experience of the plan. So basically, in a way, it brings you a bit closer to a defined benefit pension plan. Although here, of course, there's variability based on the experience, but it allows you to pool all the members of the plan in that way. So anybody who wants to participate in these VPLAs can do so, and then they can benefit from that pooling. Does that address the question?
Members, does that satisfy the question?
Yep. Thank you.
Okay. Then shall clause 90 carry on division?
On division.
Clause 91. I don't know who's up on that one. Maybe it's Max or Trevor. Trevor, go ahead.
No, I can speak to clause 91. This relates to specified multi-employer plans. A specified multi-employer plan is a common type of defined benefit pension plan in unionized trades where contributions to the plan are determined at a per hour rate under collective bargaining arrangements. Currently, there are restrictions on benefits accruing to members after they who are older than 71 years of age or who have retired. And so what this measure would do is that would prohibit contributions or prevent contributions in respect of these employees who can't benefit from the plan anymore, or in respect to the members who can't benefit from the plan. So it makes the rules apply more appropriately where you're not making contributions for benefits that can't accrue in respect of a member.
So
I see Ed, go ahead.
Yeah, just as a general question, Mr. Chair, to our witnesses, is the government becoming more generous or relaxing and expanding the ability of Canadians to plan for their retirement? Is that where all of these different clauses and provisions are fitting into?
Who wants to take that one on?
I can turn to my colleague Max as to the providing more flexibility for retirements, because that is that is certainly one of the driving forces for ALDAs, or advanced life deferred annuities, and variable purchase life annuities. This specified multi-employer plan more responds to an oddity in the current rules, where somebody could be working past 71, no benefits could under the current rules were or could accrue to them, but there's still contributions being made in respect to them, and that from time to time we receive comments saying, hey, here's a situation, the rules don't work appropriately, and we respond to them in order to fix them and make them work more appropriately. So this specified multi-employer plan is more of a technical fix to respond to a situation where the rules didn't work as they should, and then I could maybe turn it over to Max to discuss how some of the other measures are helping Canadians save for retirement.
Yeah, my question was a much more general one. The VLPAs and some of the other innovations that are happening within the industry, I'm assuming, are introducing additional flexibility for retirees to use.
So what you're really saying, Ed, your question was really related to the good things that the government is proposing on pensions. Was that it?
You know what? The government has to do something well. Maybe this is the one thing it's doing well, Mr. Chair.
Mr. Baylor, go ahead.
Well, maybe I just briefly say that indeed, echoing what Trevor was saying, ALDAs and VPLAs, that is the purpose. It's to provide greater flexibility and provide additional tools, if you will, that can be used to better plan and expand the options to plan in retirement and how and when you receive your income in retirement. So for those two measures, yes, that's the idea.
Thank you.
All right, thank you all. Shall clause 91 carry on division?
On division.
Clause 92.
Clause 92 is a consequential amendment relating to the extension of the Canada Emergency Wage Subsidy. The wage subsidy provides subsidization in respect of broadly two classes of employees. It provides the basic set of rules for active employees, but it also provides subsidy in respect of furloughed employees, that is, employees who are on leave with pay. And what this change to the regulations does is that it provides the parameters for the extended wage subsidy periods for these furloughed employees and their wage subsidy rates.
Shall clause 92 carry on division?
On division.
Gabriel, your question on that one. Go ahead, Mr. St. Marie.
So does the minister have the power to modify the benefit rates, the amounts by regulation? Can she change them through regulation, by means of regulation?
This amendment is the rates for furloughed employees are currently set out in the regulations, and this is a case where it is currently set in the regulations. So those are many of the other rates or can actually be changed by regulation as well. For the base wage subsidy rate, the rent subsidy base rate, those can be changed by regulation as well. But this one relates to furloughed employees, and it is currently set out in the regulations.
Okay, merci.
Thank you, Alan. Turning to clause 93.
Clause 93 relates to the enhanced capital cost allowance or accelerated investment incentive deductions available for zero emission vehicles and the expansion of the types of vehicles that qualify. As we discussed earlier, the capital cost allowance system is based on a number of capital cost allowance classes where different types of assets are put in different classes, and each class has its own capital cost allowance deduction rate. So this introduces a new capital cost allowance class, 56, in respect of these new zero emission vehicles.
Okay, shall Pat Kelly? You're muted.
I don't have a question, and I'm content to let it go on division. But I didn't hear you call 92. Did you call 92 before?
Yes, I did.
Gabriel?
Yeah,
you did.
I called 92 before Gabriel. Not a problem. Good job. You're watching. I did call 92 before Gabriel spoke. So shall clause 93 carry on division?
On division.
94.
These amendments are consequential on the amendments to the registered disability savings plan measures, I believe, but these are, I don't know if somebody else was planning to come to speak to Canada Disability Savings Regulations.
So is there anybody in the room that can give a signal to the clerk on the Canada Disability Savings Regulations? We're on page 121 of the bill.
If not, I think we could probably speak to them. And my colleague, Leslie Taylor, is, I think, in the lobby, who is one of our policy leads on the registered disability savings plans.
Okay, Leslie, did you say, Trevor?
Leslie Taylor.
Leslie Taylor, Alexander. We could find her. There she is. Looking bright and ready to go. Go ahead, Ms. Taylor. We're on Canada Disability Savings Regulation, Clause 94.
Well, thanks for the compliment, Mr. Chair. Just to clarify, these regulations are actually the purview of the Minister of Employment and Social Development Canada, and they were actually drafted by that department. So I work with Trevor in the tax policy branch at the Department of Finance. So I'll just note that, you know, as sort of not being the owners of these regulations, we can speak to them at a high level, but you know, we may have some limitations as to what we can delve into. So 94. If I understand it, basically is essentially just a correction to the French to bring it in better line with the existing English terminology.
Okay, anything further on that? Don't see anyone. Shall clause 94 carry on division?
On division.
Then going to clause 95.
Okay, clause 95, basically, to take a step backwards, you have to understand that under the RDSP regime, essentially one has to be eligible for the disability tax credit in a year to be able to generally continue to have a plan, be the beneficiary of a plan. The proposed budget 2019 that we're talking about in this bill would adjust that so that individuals who cease to be eligible for the DTC may keep their plans open and retain the grants and bonds that have been paid into those plans. But under the old rules, we did have a special rule that allowed for individuals who perhaps ceased to be eligible for the DTC, but for whom there was an expectation that in future years they might regain their DTC eligibility. You know, one might imagine a condition, a disability that could wax and wane over time. So 95 is essentially repealing the parts of the rules that relate to that special election to keep a plan open if one expected to regain DTC eligibility. It's essentially just not needed anymore given the new proposed regime.
I don't see any hands up. So shall clause 95 carry on division?
On division.
Clause 96.
Okay, 96 basically deals with events that can trigger a need to repay grants and bonds to the government of Canada. So, for example, if an individual dies, their plan needs to be wound up. So it can trigger the need to repay grants and bonds under certain conditions. So this basically just specifies how the rules will work in instances where we're no longer dealing with an individual that continues to be eligible for the disability tax credit, but under this new regime, an individual that is no longer eligible for the disability tax credit.
All right. Shall clause 96 carry on division?
On division.
On division. Thanks for the explanation. Clause 97.
So 97 actually just repeals a section that specifically related to that special election I spoke to earlier, where an individual expected to regain DTC eligibility in the future, again, just no longer needed. So cleaning up the regs for that.
On division.
On division. Clause 97 carried on division. Clause 98.
Clause 98 is just essentially a bit of a clarification that no repayments are required on any disability assistance payment, which is a fancy way of saying the withdrawals from the plan after an individual attains the age of 59. It's basically just for additional clarity that there is no repayment after that age.
Shall clause 98 carry on division?
On division.
Okay, clause 99.
Okay, this is the final one with respect to these regulations. This deals with where a disability assistance payment, which, as I said, a sort of fancy way of saying a withdrawal from this plan, occurs. It lays out, any repayment requirements that would be applicable to an individual that's no longer DTC eligible.
Don't see anybody raising a question. So shall clause 99 carry on division?
On division.
That completes part 1. We will go to part 2, GST, HST measures. Are we ready to see clauses 100 to 116 with unanimous consent and carry them on division?
No.
Oh, no. Okay, then we will go to clause 100.
Okay, I'm going to speak to
go ahead.
Clause. So essentially, clause 100 amends the main definitional provision in the GST HST legislation. So there's a few things in there. The first amendment, it's a consequential amendment to the e-commerce measures that are found later in this part.
The second amendment changes, well, it's just there to align the French and the English versions of the Act, but we don't think it changes anything in the CRA's interpretation.
It's concerned their virtual currency. So the amendment in this bill makes sure that the virtual currency are treated as a financial instrument. So the supply of it becomes an exempt financial service. So if a person buys Canadian dollar with a virtual currency, they don't have to charge tax on their supply of virtual currency.
Okay, thank you. Shall clause Tamara, Ms. Jansen. You're muted, Tamara.
Sorry, I forgot already. There's a little bit of a break between the English and the French translation. So I just want to understand, you're saying that you will not charge.
The second amendment is that we try to ensure that the French and the English version of the legislation says the same thing. So in this case, there was an ambiguity. Whether they were saying exactly the same thing. Interpretation principle will say you have to find a common interpretation between the English and French. So we did a very small amendment here to ensure that both official versions say the same thing. And we don't believe that this changed anything in how CRA interpreted and will interpret that provision.
Okay.
Mr. St. Marie.
Oui, lorsque vous parlez de...
When you talk about virtual currency, would that be like Bitcoin? Things like that, yes. Okay, thank you.
Shall clause 100 carry on division?
On division.
Clause 101.
Yes. So clause 101, this is again an amendment that is made to ensure better consistency between the French and English version of the legislation, and it's linked to the one of the e-commerce that is found later in the bill. It's a consequential amendment.
Shall clause 101 carry on division?
On division.
Clause 102.
So 102 is a consequential amendment to the e-commerce amendments. And essentially what the rule does, it's ensure that there's a rule right now in the legislation that deems some supplies to be made outside of Canada. And when it's outside Canada, it's usually not taxable, but this creates an exception so that the e-commerce provision, even if it's a foreign supplier to a consumer in Canada, the supply will not be deemed by this provision to be made outside Canada. Again, this is only a consequential amendment to ensure that the rule works properly.
Shall clause 102 carry on division?
On division.
Clause 103.
So 103 is also a consequential amendment to the e-commerce provision. This is the rule that says who's a small supplier in respect of the GST HST. Usually it's sales of less than $30,000 of taxable supply a year. But since the new e-commerce rules later in this bill basically create a new type of threshold, it makes sure that they basically this rule, this existing rule doesn't affect the new rules. It's a consequential amendment.
Shall clause 103 carry on division?
On division.
Clause 104.
So 104 is again a consequential amendment to the e-commerce provision, and it's basically there to ensure that there's no conflicts between some existing rules and the new rules that we put that the bill puts in respect of those e-commerce transactions.
No questions. Shall clause 104 carry on division?
On division.
Clause 105.
So 105 has two aspects. The first aspect is similar to the clause just above. It's a consequential amendment to the e-commerce amendments. And essentially, it's ensured that an existing rule in the legislation doesn't contradict what is intended to be done in the new provision of e-commerce that come later in this bill. The second aspect of it, these actually deals with drop shipment rules. These drop shipment rules, so essentially it's a bit complex, and it deals with non-resident and resident, and it's usually in a series of transactions. So without going details about what are the drop shipment, the only amendments being made here is that these rules apply mainly to goods. And CRA took the position that the fungible goods, so essentially a good that is sold in bulk, some business may not benefit from those rules because in a series of transactions, it may not be the same pound of ore or mineral that is transferred in the chain. And CRA has a position that it has to be the exact same good. So this is clarifying that fungible goods can benefit from those rules.
No questions. Shall clause 105 carry on division?
On division.
Clause 106.
So 106 deals with what is called the holding corporation rule in the GST legislation. In certain circumstances, this holding corporation rule allow a holding corporation to claim ITC in respect of some expenses that they are in relation to a subsidiary or a related company. There's two amendments, well, 3 different amendments being done. The first one is that it clarifies which expense can give rise to those ITCs. The second amendment expand the rule by, right now, the holding corporation rule only apply if the holding company is a corporation. We're expanding the rules to allow the benefit of these rules for a holding entity that is a trust or a partnership, because one particularity of the GST HST legislation is that trust and partnership are treated as separate legal entity. And because we opened those rules, there's a few little technical change that have been made to improve the text.
Don't see any questions. Shall clause 106 carry on division?
On division.
107.
So 107 is the main rule that deals with e-commerce in this bill. So as you may know, there's 3 different measures for e-commerce. One is to ensure that non-resident vendors that supply digital product and services to consumers in Canada, they would be required to register under a simplified system and collect and remit the GST HST on their taxable supply to consumers in Canada. That's the first aspect of the measures in this section. The second aspect is dealing with goods that are currently in Canada. It's going to be sold to a person in Canada. And it basically requires a distribution platform operator and non-resident vendors to register under the normal GST HST rules and to collect and remit the GST HST in respect of certain supplies of goods shipped from a fulfillment warehouse in Canada to a consumer in Canada. So you may have gone before on some website, like online stores and things like that, when it said like basically the product is sold by company A, but it's fulfilled by company B. And these are the kind of transaction that these amendments will affect. And the last aspect of these e-commerce provision is basically to apply the GST/HST on all supplies of short-term accommodation in Canada that is facilitated through a digital platform.
Mr. Vach.
Yeah, okay, good. Thank you. I'm just wondering, is this something that's going to apply to Netflix now? Does this accommodate a Netflix type tax, or is this just for something like an Amazon where you would buy something, let's say in the United States, and have it imported in here? Give me an example how this would apply.
So I'm not going to comment on how the rule will apply to a specific company, but what I can tell you is the first aspect of the amendment that basically I described is intended to target foreign company that provide streaming services in Canada.
Mr. Vast.
Yes, so let me get this right. You mentioned there's a simplified registration process for e-commerce vendors. These e-commerce vendors are outside of Canada, correct?
Yes.
So we're asking foreigners to register for HST, GST purposes if they want to do business in Canada. Is that correct?
Yes.
And we're asking them to remit tax to the Canadian government.
Yes.
Has any analysis been done on whether this is going to reduce the willingness of foreign e-commerce vendors to actually do business with Canadians?
Well, the model that is proposed here, my understanding is the model that is generally proposed by OECD. The model has been has been implemented in other jurisdictions. And from what I understand is that there's a willingness to comply by those companies with those rules. So basically they keep their good corporate name.
Yeah, so I'm not opposed to this measure. It's just that I'm wondering to what degree there will be compliance with this, and whether we'll lose some vendors and others will find ways of circumventing these rules.
From what I'm the legislative guy, but from what I understand from the policy people is that in other jurisdictions where a similar model has been put in place, the major player have complied with those rules.
Okay, Ms. Jansen, I would like, and Mr. St. Marie, I promised the translators we would adjourn about now. So if we could take the two questions and then we'll have to suspend rather. Ms. Jansen.
Yeah, you mentioned that the big players have been actually chatted with, like somebody in the Canadian government has actually talked with the big players and they've said that they're willing to do this? Is that what you were saying? Or you were saying that they've done it elsewhere, so we just expect they'll do it here?
Well, I said the first part, but to add to my answer, my understanding is that people have talked to the major players and their intention is to comply.
And people would be, who would the people be?
Well, I don't want to name specific companies here.
No, but I mean that we're talking to the companies. Was it federal
officials.
Employees or officials?
Well, I know officials talk to. I would not be surprised that the minister's office talks to those companies too, but I have no details about that. I just know that officials from the sales tax division in the tax policy branch have talked to some of those major players.
Mr. St. Marie.
Oui, je tiens d'abord à dire un immense merci.
So I would like, first of all, to thank the interpreters, to the entire technical team who've been working with the committee for 3.5 hours. And thank you for the officials for being available. Mr. Mercier, if you could come back with a list of the OECD countries that have this legislation, it would be greatly appreciated. Thank you.
Won't be able to finish clause 107. We'll have to vote on it when we come back. And yes, we all agree with Mr. St. Marie's comments on all the officials and the interpreters who have worked so hard. This is pretty technical stuff, so it's going to be hard to keep up in the booth. So we Just for members, because we do have now till we will suspend till about 7:33 in Ottawa time, and we will have till 9:30 Ottawa time. They managed to negotiate agreement to go till 9:30. I would suggest to committee members if they could look through the bill and find a way to speed this up a little bit to that officials don't have to explain every single clause. Maybe we could move some in groups on division if people can look through the bill, see where their concerns are, because officials did spend 2 evenings, plus we're before committee already, so we don't want to wear them out completely. So with that, we will suspend till actually 7:34. And we'll start on the dot, 7:34. Meeting suspended. studying Bill C-30, clause by clause. So we were at clause 107, had a discussion on that. Is there any further questions? I see Ed, your hand's up. Go ahead.
Yes, during our break, Mr. Chair, I was just going through 107. This is a very long clause, but I wanted to get our officials to comment on the way Airbnbs are going to be treated under the e-commerce provisions.
Okay, I'm not going to talk specifically about Airbnb because the application of the legislation to a particular fact situation is the responsibility of Minister of National Revenue. But I can go through the measure that deals with short-term accommodation. Yeah, so essentially that's the third aspect of the e-commerce measure. And it only deals with supplies of short-term accommodation in Canada that is facilitated through a digital accommodation platform. The amendments, they require the GST HST to be collected and remitted by either the property owner or the accommodation platform operator if the supply is facilitated through a digital accommodation platform. So the property owner would be the one who's going to remit the tax if that person is already registered for the GST HST, and the obligation to remit would fall under the accommodation platform operator if the property owner is not registered. So like I mentioned, there would be a simplified GST HST registration and remittance framework that also would be available to non-resident accommodation platform operator that are not carrying on business in Canada. So essentially, not carrying business in Canada is that beside the fact that they may have customer in Canada, they don't have like a physical presence.
Monsieur le Président, la traduction n'est pas en mesure.
Just you're not coming through to me in English, Gabriel. Try that again.
Okay.
Can you hear me, Mr. Chair? I'm just checking to see whether the interpretation is coming through. So the interpretation was not being provided for Mr. Milsu.
Oh, okay. All right. So, Mr. Marcel?
OK, je peux peut-être m'essayer de le décrire en français. Cette partie-là, ça peut-être que ça pourrait aider.
The interpreter regrets the sound quality is insufficient to continue.
Okay, donc,
I wonder, Pierre, if you could, the interpreters can't translate. I wonder if you could try your mic down a little, see if that might help. I don't know.
Okay, I was asked to raise it before, so that's fine.
All right, let's try that, and the translators just give me a signal whether it's working or whether it's not.
OK, Monsieur Sainte-Marie, voulez-vous une explication en français? Vous n'aurez pas besoin de la traduction.
And Mr. Sainte-Marie, do you want an explanation?
Mr. Sainte-Marie can hear you. Go ahead, Pierre, and we'll see where it goes.
OK. Donc, la troisième mesure dans les...
The interpreter regrets the sound quality is insufficient for her to continue interpreting.
Sur toutes les fournitures de logements provisoires au Canada qui sont facilitées par une plateforme numérique.
No, the sound is not coming through properly for the translators. So maybe if you can give a short explanation in French and then in English. Keep it as tight as you can. We'll have to do it that way because we can't do the simultaneous translation at the moment with the technical setup.
So what I was doing currently is do exactly in French what I said in English.
Okay.
So la TPS, TVH devrait être perçue et versée soit par le propriétaire, soit par l'exploitant de la plateforme de logement. Ça serait remis et perçu, ça serait remis par le propriétaire du logement si le propriétaire est déjà inscrit aux fins de la TPS-TVH et par l'exploitant de la plateforme numérique dans les autres cas. Il va y avoir un cadre simplifié d'inscription et de versement aux fins de la TPS-TVH et ce serait accessible aux exploitants de plateformes de logement qui sont non résidents et qui n'exploitent pas une entreprise au Canada. Alors, généralement, ça veut dire qu'à part avoir des clients au Canada, ils n'ont généralement pas une présence physique au Canada. Il est proposé que ces mesures s'appliquent le 1er juillet.
Mr. Fast, it was the same in both languages, but do you have a further question?
Just one last question, it's a very short one. That is there a threshold, a revenue threshold below which a short-term accommodation would not be captured, or is all short-term accommodation captured under this legislation?
I believe it's all of them, but just to be sure, there's a Dominique DiFruscio is in the waiting room. Maybe he can confirm that.
Dominic? And do you want to, okay. Mr. Clerk, did we find Dominic?
Yeah, he should be in, sir.
Okay. Oh, I got but the bill's covering half my people. So, Dominic, are you there? There he is. Go ahead, Dominic. I hope you heard the question.
Yes, hello. Good evening, Mr. Chair. It seems from a technical perspective from the waiting room, the clerk had disconnected me and then reconnected me into Zoom. So I think that's why there's a bit of a delay. So to answer the question, it would apply to all short-term accommodation in Canada. We have a $30,000 threshold, and at present, this $30,000 threshold would apply at the property owner level. What would happen is with this particular measure is that $30,000 threshold would then apply at the platform level. So in effect, you could have a property owner that is making less than $30,000 of supplies. That person would not be required to register under the general GST regime. However, if the grand total of all supplies that is being made through the platform reaches that $30,000, including perhaps many multiple property owners that are making less than $30,000, that $30,000 threshold would then apply at the platform level. In general, this measure would apply to major platforms. So in the vast majority of cases, a major platform would be making greater than $30,000 of, or excuse me, facilitating more than $30,000 of supplies of short-term accommodation. And in that case, the platform would be required to register under the simplified regime.
Okay, just for clarity, if you have a short-term accommodation facility that maybe has $10,000 to $15,000 worth of revenues, but is actually promoting itself on a platform like Airbnb, which is huge, it will be paying GST.
In a circumstance such as that, it would be the digital platform, the large corporation that would be facilitating those supplies would be required to collect and remit the GST.
So effectively, all short-term accommodation is now going to be taxed.
Effectively, that's correct. Effectively, yes. All short-term accommodation in Canada that's facilitated through a digital platform would be subject to the GST.
That's very helpful to know. Thank you.
You're welcome.
Okay, shall clause 107 carry on division?
On division.
On division. Clause 108. You're muted, Pierre,
okay.
and you will have to do it short in both languages.
Okay, I think it's good now. So e-commerce 108 is basically a consequential amendment. There's two amendments in there. One is consequential to the e-commerce measure, and the other one is consequential to the old co rules that I explained earlier. So this provision, the provision that's being amended is a registration provision. So basically this refers, it's consequential amendment to the simplified registration that I mentioned. And for old codes, it allows like the registration in certain cases of trust and partnership that would have an operating company under it and be able to claim ITCs. Alors, l'article 108, c'est essentiellement des amendements corrélatifs aux mesures sur le commerce électronique et à la mesure qui permet à des sociétés de portefeuille de essentiellement pouvoir réclamer dans certains cas des crédits taxes sur intrants sur des dépenses reliées à des filiales. Et ça parle ici, cette disposition-là d'inscription, et ça pourrait permettre à certaines fiducies et sociétés de personnes de pouvoir s'inscrire au fin de la TPS pour réclamer dans certaines circonstances ces crédits taxes sur intrants.
Thank you, Pierre. Shall 108, clause 108 carry on division?
On division.
Clause 109.
Alors clause 109, essentially, it's a measure in itself. It deals with the new housing rebate of the GST or the federal component of the HST. It relaxed one condition that exists in that rebate where currently if there's two names on the title for a new house, there's a condition that both the names, the person that have their name on the title must be occupying the new house as their principal place of residence. The amendment is fairly technical. It says that if there's two names on title, only one of the person has to occupy the house as their primary place of residence. Alors, l'article 109 est une modification au remboursement par habitation neuve de la TPS ou de la composante fédérale de la TVH. Quand quelqu'un achète une maison neuve, il y a une condition dans le remboursement que s'il y a deux personnes sur le titre de propriété, les deux personnes doivent acquérir la propriété pour l'utilisation comme résidence principale. L'amendement simplifie cette règle et c'est un amendement, c'est un allègement essentiellement. Alors la modification très technique, c'est de dire que s'il y a deux personnes sur le titre de propriété, juste une des deux personnes doit acquérir la propriété pour l'utiliser comme sa place principale de résidence.
Thank you. Shall clause 109 carry on division?
On division.
Okay, clause 110. And for those that are wondering, we're around page 160. Tamara, you were wondering earlier on the bill.
Yeah, page 161. So clause 110 is a consequential amendment to the e-commerce provision. It provides a penalty for providing false information to a platform, like if you have someone who rents short-term accommodation and provides a registration number when they don't have one, they will have be essentially try to elude the payment of tax, and there's a penalty here. Alors, l'article 110, c'est une pénalité qui est corrélative aux mesures en commerce électronique dans le cas où une personne donnerait de d'informations incorrectes. Par exemple, si une personne qui fait de la location à court terme donne son numéro d'inscription à l'opérateur de la plateforme et que la personne n'est pas vraiment inscrite dans ce cas-là, essentiellement, c'est une pénalité pour avoir tenté d'éluder le paiement de taxes.
Shall clause 110 carry on division? On division, I think that's what you said. I just didn't hear you, Ed. You were muted. Shall clause 111, okay. Clause 110 carries on division. Clause 111.
So 111, it's again a measure consequential to the e-commerce provision. It deals with where books and record have to be kept. And essentially it allows the minister to decide whether the record can be kept in a language other than French and English and at a place that is not in Canada. L'article 111 est un amendement corrélatif aux mesures de commerce électronique. Ça concerne l'obligation de tenir des registres et ça permet au ministre du Revenu national d'alléger la condition que généralement, envers la TPS-TVH, les registres doivent être tenus en français et en anglais à une place au Canada.
Shall clause 111 carry on division?
On division.
Clause 112.
So 112 is again a consequential amendment to e-commerce. It deals with the definition of business number, and it makes a cross-reference to the new simplified registration number, as the business number is usually part of your registration number. L'article 112 est un amendement corrélatif aux mesures sur le commerce électronique. Ça affecte la définition de numéro d'entreprise et ça fait référence au nouveau système d'inscription simplifié pour les mesures en e-commerce. C'est un amendement purement corrélatif.
Shall clause 112 carry on division?
On division.
On division. Clause 113.
113 is an amendment that is consequential to the e-commerce provision. Since there's a new penalty that's being created as a consequential amendment, there's a rule that exclude that type of penalty because it's similar to other penalty existing under the Act from a limitation period. L'article 113 est une mesure corrélative au commerce électronique. Ça exclut une règle qui limite la période de limitation de la pénalité parce que cette pénalité est similaire à d'autres pénalités qui existent déjà en vertu de la TPS-TVH.
Tamara, Ms. Jansen. You're muted, Tamara.
It's getting late. Do I understand you to say that there is no limitation on the penalty? Like time-wise?
In this provision, there's a rule that limits penalties. I don't have in my head right now, and this one, yes, it exclude that rule from the limitation on penalties.
And why would that be? Why would it be different for other ones?
No, essentially, it's because it's similar to other ones that are already listed in this provision. So you see, it's already listed 280.1, 285, 285.01, and this one is 285.02. So it's very similar to existing provision for the normal GST rule, but in this case, it's in case of e-commerce.
I wonder, could you? I'll let Gabriel come in. I was just going to ask you if you could just give us that in French as well. Just
oui, et Monsieur le Président, c'était juste le point que je voulais soulever aussi. Merci.
Yes, that's the point I wanted to raise.
La partie française de ma réponse à la question, dans cette disposition-là, il y a une limite de temps sur certaines pénalités. Là, je ne me rappelle pas c'est quoi la limite, mais cette mesure-ci fait qu'il n'y a pas de limite de temps pour cette nouvelle pénalité reliée au commerce électronique parce que cette pénalité est vraiment similaire à d'autres pénalités existantes en vertu de la TPS-TVH qui n'ont pas de limite de temps. C'est un amendement corrélatif à la pénalité que j'ai parlé 2 articles précédents.
OK, shall...
L'article 113 est-il adopté avec dissidence? Avec dissidence. D'accord.
Translators, I don't know what's going on. I'm hearing you both. Clause 114.
Clause 114 is the measure that was announced in the Fall Economic Statement 2020 to relief from the GST-HST face mask and face shields. L'article 114, c'est la mesure qui est annoncée dans l'énoncé économique de 2020 qui donne un allègement de la TPS-TVH aux masques et aux écrans faciaux.
Shall Clause 114 carry on division?
Should we call a recorded vote on this? What do you think, Mr. Chair?
Well, now it's your right to call one if you want to call one.
No, division is fine.
Division's fine. We could call for even a standing vote. Shall go to Clause 115.
Clause 115 is a relieving amendment. Currently, if you export goods from Canada, they're usually not subject to GST, HST, but also the freight transportation service from a place in Canada to a place outside Canada is usually also relieved. In this case, it's adding driving services to that definition of freight transportation services because CRA was of the opinion that because the provision used the word transportation, that if you exported a vehicle, essentially the vehicle had to be towed or on top of another vehicle. So that's the English explanation. Alors, l'article 115 du projet de loi est un allègement et élargit la définition de transport de marchandises. Présentement, généralement, quand des biens sont exportés du Canada, ils ne sont pas sujets à la TPS-TVH. Et c'est aussi le cas généralement pour le service de transport de ces biens exportés. L'amendement, ce qu'il fait, c'est qu'il élargit la définition de transport de marchandises en ajoutant des services de conduite de véhicules pour être exportés. Présentement, l'Agence du Canada avait la position que, étant donné que la disposition utilise le mot transport, si c'est un véhicule qui était exporté, il devait soit être remorqué ou être au-dessus d'un autre véhicule.
Shall Clause 115 carry on division?
On division.
Clause 116, which will end Part 2.
So Clause 116, it deals with new housing rebate. This is the provincial equivalent for the Ontario new housing rebate of the measure I explained before about when there's two persons on a title of a property. The Ontario rebate is a rebate of a portion of the provincial component of the HST only. Alors, l'article 116, c'est similaire à un amendement que j'ai expliqué déjà concernant les remboursements d'habitation neuve. Dans ce cas-ci, c'est un remboursement d'habitation neuve de l'Ontario, de la composante provinciale du remboursement. Et ça fait comme dans l'amendement pour la TPS, s'il y a deux personnes sur un titre, only une de ces personnes doit occuper la résidence neuve comme principale place de résidence.
Thank you, Mr. Brazil. Shall Clause 116 carry on division?
On division.
All right, we're starting Part 3, amendments to the Excise Act 2001. There's no amendments in Clause 117 to 125. Do we want to see them all as one group?
Yeah, we'll do them separately, Mr. Easter.
Okay.
This is good. This is working well.
Then going to Clause 117.
Okay, I'm going to explain only 117, but just to say that everything in Part 3 is essentially the amendment needed to do the tobacco tax increase. So the amendment to 117 is essentially it's fixing a date for the triggering of an inventory tax. L'article 117 du projet de loi, je vais juste dire en commençant que les articles 117 à 125 sont toutes les modifications sont nécessaires pour mettre en œuvre l'augmentation des droits d'accès sur le tabac. L'article 117 établit essentiellement une date qui déclenche une taxe sur les inventaires.
Shall 117 carry on division?
On division.
118.
So 118 is essentially the provision that provides for the inventory tax. L'article 118, c'est l'article qui prévoit la taxe sur les inventaires.
Shall 118 carry on division?
On division.
Clause 119.
L'article, clause 119 is essentially establishing a due date for the filing of the return for the inventory tax. L'article 119 établit le délai dans lequel une déclaration doit être produite au sujet de la taxe sur les inventaires.
Shall clause 119 carry on division?
On division.
Clause 120.
Clause 120 is very similar to 119. Essentially, this is the date at which it established the date at which the inventory tax must be paid to the receiver general. L'article 120 est très similaire à l'article 119, mais dans ce cas-ci, c'est établi la date à laquelle le paiement de la taxe sur les inventaires doit être fait au receveur général.
Shall clause
Monsieur le Président, j'aimerais...
Oh, sorry, Gabriel.
J'aimerais savoir...
I have a question. I remember that an MP, the MP from Malpec, said that we should be smoking cigars because there would be a tax increase. And I was just wondering, with this article, are we talking about cigarettes, tobacco? Does it also concern vaping products? And I was also thinking that we have someone that works in the Bloc Québécois, and he thinks that he doesn't really agree with this, but of course I don't agree with him. Thank you.
Vous allez voir dans le reste de ma présentation que ça s'applique également aux cigares. Non, ça s'applique pas sur le vapotage. So you will see in the remainder of my presentation, it also applies to cigars, but no, it doesn't apply to vaping products.
All right. Good question. Shall clause 120 carry on division?
On division.
Clause 121.
121 is essentially the change in rate for the tax on cigarettes. L'article 121, c'est le changement de taux dans l'annexe pour les cigarettes.
Shall clause 121 carry on division?
On division.
Clause 122.
Clause 122 is essentially the change in rate for what is referred to as tobacco sticks. I'm not too familiar with that, but I'm told it's essentially a type of cigarette where you have to put yourself the filter. It's not very popular these days, I think. L'article 122, c'est l'article qui change le taux pour les bâtonnets de tabac. Les bâtonnets de tabac, qu'est-ce que je comprends, c'est comme des cigarettes sans filtre où le consommateur doit mettre le filtre lui-même. Ce n'est pas un produit qui est très populaire.
Shall see no question. Shall clause 122 carry on division?
On division.
Clause 123.
So 123 is a change in rates for what is called manufactured tobacco that is not covered by essentially the other change in rate. L'article 123, c'est le changement de taux pour qu'est-ce qui s'appelle des produits manufacturés de tabac, ce n'est pas prévu dans les autres articles.
Okay. Shall clause 123 carry on division?
On division.
Clause 124.
Clause 124 is the change in rate for the taxation of cigars. L'article 124, c'est le changement de taux pour la taxation des cigares.
Shall clause 124 carry on division?
On division.
On division. Clause 125. So 125 is a change in rate for the additional duty on cigars. L'article 125, c'est le changement de taux pour le droit additionnel sur les cigares.
I have I believe Miss Jansen, I'm not sure what order, but Miss Jansen first and then Mr. Fast.
Thank you. I'm just curious. You mentioned that the tobacco sticks weren't that popular, but how about chewing tobacco? I don't think you mentioned that. Is that not in this?
Je crois que I think it's a manufactured tobacco product. Je crois que c'est un produit manufacturé du tabac.
Mr. Fast.
Okay, can I ask you, what was the purpose for increasing the rate of tax on tobacco products? Was it to increase tax revenues? Was it to get Canadians to stop smoking? And if so, has an analysis been done to determine how much an incremental increase in the tax on tobacco products would impact the rate of smoking in Canada?
So I think the answer is all of the above, but there's Phil King that is in a waiting room that's maybe in better position than me to answer about tobacco rate cessation and those kinds of things.
Sure, Mr. Chair.
Yeah. Mr. King? Phil King, did you say?
Yes.
Yes, if you can let Mr. King in, Alexander.
So I'm going to repeat in French while he's joining. Oui, c'est probablement pour ces deux objectifs, mais je vais laisser M. King répondre plus sur les questions de l'effet des taxes sur le tabac sur la consommation.
There's Mr. King. Phil, go ahead. Did you hear the question?
I certainly did. Thank you, Mr. Chair. Thank you, Mr. Fast. Yeah, so Pierre is correct. I mean, the goal is twofold: to raise some revenue and to discourage smoking, which is, excise taxes are fairly effective at doing that. And if you look at smoking rates in Canada, they've gone from about 25% of the adult population in 1999 or so to around 15% now. And that's in the context of increasing taxes, not just at the federal level, but at the provincial level as well. I mean, general provincial taxes are a bit higher than federal taxes on tobacco. But I think your specific question is about, how effective is it? Can we quantify this?
Yeah.
That I wish I could give you a firm answer, and I wish I had a very good, well-specified model where I could say, $1 in tax gets you this sort of decline rate. The decline rate, it's not an issue which is amenable to that sort of thing. There are lots of moving parts, you see. The past isn't really a good guide to the future on this. For example, you've got far fewer people now who do smoke, and the nature of those smokers, it's a bit different. You're kind of down to the hardcore smokers, so maybe they don't respond as much to prices as people who did many years ago. You've got different products in the market.
Point d'ordre, Monsieur le Président, désolé.
A call to order. There is no interpretation. The interpreter is not able to interpret the witness.
Where is your mic, or maybe you're using your computer? Yeah,
I'm on the computer, and
is the translators having a problem translating this witness?
Hello, Mr. Chair. It's Alexander Roger calling.
Okay, we're okay now, I think, according to Mr. St. Marie. Go ahead, Mr. King.
Okay, I'm sorry. Would you like me to rewind a little bit, or?
Yeah, maybe it better.
Okay, so maybe I'll start with the issue of the modeling and how it would be very nice if we could say specifically that $1 increase in tax leads. No good.
No, point d'ordre, Monsieur le Président, ça fonctionne.
It's not working.
Okay. Can you do both languages, Mr. King, or not?
I cannot do it justice.
Okay.
Would it be possible to provide an answer in French as a follow-up to the committee?
Mr. Clerk is waving.
Yeah, Alexander, what's your point?
Okay, Mr. King, do you see below the screen on the bottom left, there's a mute, unmute button, and there's an arrow pointing upwards?
I do.
If you click on the arrow, it says select a microphone.
There is no select microphone button. Select camera, but no microphone.
Okay. Then try to unplug and replug your microphone. Sometimes it resets it.
Perhaps I have it now.
Yes, you do.
Is that better?
It sounds better I'll let the interpreters decide.
Okay.
Are we okay, interpreters?
a little bit, if that's...
Go ahead. Yeah.
Okay. So I wish I could give you a very firm answer and that we had very well specified and good models for predicting and relating quit rates to the prices. It's not always possible because, well, the past isn't necessarily a good indicator of the future in this case. For example, you have a lot fewer people who are smoking now in Canada, and the nature of those smokers is a bit different. You're sort of down to the hardcore smokers now, as opposed to many years ago, people who were, you know, I don't know, recreational smokers, if you could call them that. You've got as well very different options like vaping. We didn't have vaping options back many years ago as well. So it's difficult to draw a fine line and be very specific when it comes to this sort of question about translating the dollar increase into the quit rates. All I can say is maybe reiterate my initial remarks is that, you know, tobacco taxes have gone up over the years and quit rates have also maintained. The smoking rate has dropped from about 25% to about 15% since 1999 or so.
Okay, thank you. Shall clause 125 carry on division?
On division.
Okay. Thank you. Thank you both. So we're now turning to, and I'm not sure who's in the waiting room for part 4 on the various divisions, but we'll start with Division 1, stability and efficiency of the financial sector. There is no amendments on clauses 126 to 139. Do we have unanimous consent to see them as one?
No.
No?
No.
All right. Shall go into clause 126? Do we have anybody in the room? I see Miss O'Brien. Are you on that one?
I'm actually going to hand it off to a colleague of mine if we're required to go through it clause by clause. Okay. We have both Jean-François Girard and Julie Trepanier in the waiting room, and they can provide overviews of clauses 126 through to 139.
Okay, so, then if we can bring them in, Mr. Clerk, he's shaking his head. Yes, we'll get them in, Aaron.
Terrific. Thank you.
Jean-François Girard, I see him, and Julie Trepanier. Okay, who wants to take on 126 and give us as concise an explanation as you can?
All right, thank you, Mr. Chair. Clause 126 would amend the Canada Deposit Insurance Corporations Act, in particular the stay of proceedings provisions of the Act. These stays can be imposed in the circumstances where an institution has failed and is under the resolution provisions of the Act. So the clause has a couple of components. One of them is dealing with stays that would apply to certain shares and liabilities that can be converted into equity under resolution. Another element would be applying to certain eligible financial contracts. These are typically known as derivatives. And the amendment would exclude the stay provisions, the application of the stay provisions of the Act to eligible financial contracts entered between the member institution and sovereign entities and central banks. And as well, there's an enabling provision in there that would provide the CDIC to make bylaws to require that certain clauses be included in the eligible financial contracts of its member institutions. That's
thank you.
Clause 126.
We have a question from Mr. Falk.
Thank you, Mr. Chair. Yeah, I'm just a little curious about the impetus for these changes to the CDIC. Is the intent just to purify the types of deposits that are insured, or is there a different motivation? Like, are you looking at just deposit accounts, or was there actually a situation where some of these derivatives were were in play or there were rollovers into equities?
No, these provisions do not affect the deposit insurance framework itself. They deal with situations where the institution has failed. And there are some provisions that deal with these EFCs that are part of the management of the bank's book. Normally these clauses, these EFCs have clauses have termination rights. But in these circumstances, when the institution is in resolution, the CDIC would generally attempt to sell the institution to a buyer. And the value can be preserved if the book is kept whole so that these EFCs are not terminated. So there are some state provisions in the Act that apply in these circumstances, but this has really nothing to do with deposit accounts and the payment of insured deposits.
Okay, I see no further questions. Shall Clause 126 carry on division?
On division.
Clause 127.
Clause 127 also deals with resolution. So currently, the CDIC can take control of a member institution and has to resell it within a period of 60 days, and an extension can be granted by the Governing Council. So the amendment would extend the period under which the sale would take place to up to 12 months. And an extension by the Governing Council for up to 18 months. And that's it. That's 127.
Shall Clause 127 carry on division? On division?
On division.
128.
128 deals with the compensation provisions of the Act. So again, it has really nothing to do with the insured deposits. It applies to other creditors that may be in a position. Sorry, let me take a step back. So the compensation provisions of the Act, they provide a framework whereby creditors are made no worse off under the actions of the CDIC than under a liquidation. So the Section 128 really clarifies that the person, the application of these compensation provisions, it specifies that the person who is entitled to a compensation it's as a result of the application of the regulation. So we're just clearing up an ambiguity in the drafting.
Shall Clause 128 carry on division?
On division.
129.
129 is also a fairly technical amendment. It clarifies that the decision, it adds the term determination to the drafting of the Act, which was an ambiguity in the English version only. It uses decision and determination in certain areas. So it clarifies that it's either a determination or a decision.
Shall Clause 129 carry on division?
On division.
Clause 130.
130 also deals with the compensation provisions of the Act. So essentially, when a determination of a compensation has been made by the CDIC, there's an appeals mechanism if the creditor feels that the compensation was erroneous. The provisions here that are proposed would really clarify the standard to be met to use the appeals mechanism. And essentially is that the corporation would have made a determination that's based on an erroneous finding of fact that is made in a perverse or capricious manner or without regards to the material before it, or on an unreasonable estimate. So that's that test that's being clarified for the appeals mechanism.
Shall Clause 130 carry on division?
On division.
Clause 131.
131 is really an enabling provision to clarify that certain bylaws can be made by the corporation.
No questions I see. Shall clause 31 carry on division?
On division.
Clause 132.
So clause 132 essentially repeals a transitional provision that will be introduced in clause 138. So I can deal with that at that time, or we can I can explain what 138 does.
If you could explain it at the same time, that would be helpful. Thank you.
Okay, essentially in clause 138, it clarifies certain powers for the CDIC to pay out certain insured deposits that are trust deposits that are made through a broker. So there are certain deposit brokers that are in business that can place deposits on behalf of their customers, and these are held in trust. And it deals with a new regime that is planned to come into force next April, and that clarify the information requirements that must be kept on the records of the financial institution for these trust deposits, as to ensure a precise and fast payment in the event that the institution failed and deposits, insured deposits needs to be paid out. So the clause 138 provides has two elements to it. One is it deals with situations where there might be an error or an omission on the records of the financial institution, and essentially provides that CDIC may pay deposits that are insured in the event that there is an error made by the trustee or an omission, but under circumstances, certain circumstances, such as having made best efforts to correct it. The other element under clause 138 is a transitional rule, and that's the one that relates that will be in place for 2 years. And essentially, it's provides that the a bit of a cure period. So in the event that there's an insured deposit that must be paid, and there's an error and omission on the records of the institution, there's a cure period of 90 days, whereby if the information is provided to the CDIC, the payment could be made over that period. So that provision would only exist for 2 years and reflecting a transition period for the new regime that comes into force next April.
Okay, we'll deal with clause 132. Are you in clause 132 or 138, Ted?
No, I'm at 131 and 138. I was just going to ask, that it's very interesting what he's described to us, but what is actually the frequency of something like this coming into play?
The frequency is fairly low because the last failures in Canada have occurred in the 90s. And this regime that we're talking about trust deposits, is a new regime that, these trust deposits were already insured deposits, but the information requirement have been updated through legislation that was adopted in 2018. But essentially, failures have not occurred in the last 30 years. So these are, I would say, unusual events. But essentially, the purpose of the act is to be ready if it were to come about.
Thank you for that. Shall clause 132 carry on division?
On division.
Clause 133.
I believe 133 is for my colleague, Julie Trépanier.
Julie.
Yes, thank you, Chair. So clause 133 replaces the definition of clearing and settlement system and clearinghouse in section 2 of the Payment Clearing and Settlement Act to clarify that the Act also applies the system for the exchange of payment. And this is to reflect the fact that as payment systems continue to evolve, the exchange, clearing, and settlement functions are becoming independent. And these amendments would essentially clarify the Bank of Canada's authority to designate payment exchange to oversee the risk management of payment system in Canada.
Thank you. Shall clause 133 carry on division?
On division.
Clause 134.
134, it's an amendment to the Payment Clearing and Settlement Act that deals with the compensation provisions that are in that act in the event of a failure of a financial market infrastructure. So it has essentially mirror provisions to those I just described for the CDIC Act, but they are in the Payment Clearing and Settlement Act. So essentially, Clause 134 sets out the standard to be met for the appeals mechanism I described a moment ago for the CDIC.
Shall clause 134 carry on division?
On division.
135.
135 is similar to the clause I described a moment ago, which clarified the English version of the Payment Clearing and Settlement Act to speaks to a determination. It has a term determination in that section.
Shall clause 135 carry on division?
On division.
136.
136 is for my colleague Julie.
Julie?
Yes. So clause 136 replaces subsection 14 of the Payment Clearing and Settlement Act to ensure that the information gathering powers of the bank in respect of clearing and settlement system also applies to payment exchange. So this is in relation to the modification of the definition in clause 133.
Shall clause 136 carry on division?
On division.
137.
So clause 137 replaces subsection 18.3 of the PCSA, which sets out the ability of the governor of the bank to share information on designated system. And again, this is to make sure that these powers also extend to payment exchanges, again, in relation to the change in the definition.
Tamara, Ms. Jansen.
Yes, I'm just curious. Are we making all these changes since we are expecting there's going to be a lot of institution failures coming up after the pandemic? Like why are we, if we haven't had much over the last 30 years, why are we making these changes?
Did you never go to Boy Scouts, Tamara? Be prepared. Sorry, Julie answered that.
Girl Scouts. No, I didn't.
Actually, this is probably more a question for my colleague Jean-François.
Okay, Jean-François.
Yes, essentially, in the aftermath of the financial crisis in 2008, there was an agenda for improvement to the system, the legislative regime, and major reforms were introduced in subsequent years. Over time, these are being examined, they're being tested. In particular, the CDIC does, for example, tabletop exercises that simulate a failure. And sometimes some improvements or precisions that should be included in the legislation are identified. So these are, as I described, they're very, very technical points. And really, they're not reflecting a new policy orientation. It's really fine-tuning and clarifications.
Mr. St. Marie.
Oui, je veux réagir.
I'd just like to react to the comment that you just made, Mr. Chair. There are tremendous delays. The budget was tabled on the late side. There are hundreds of pages on all sorts of subjects. The BIA we've got before us, I've read it many times, and every time I read it, I discover there's something new that I hadn't known about before. So I feel that the deadlines are so tight and that there are no bad questions. I think it's time to ask our questions now, even though we're supposed to be ready. I'd say, Mr. Chair, that sometimes I have to read something 4 or 5 times before I say, oh, maybe there's something wrong here. Maybe it was a trap. So I would just encourage my colleagues to ask all the questions they feel they need to ask. I think it's a great exercise and a very important one. Thank you, Chair.
You're not alone there, Gabriel. Mr. Falk.
Thank you, Mr. Chair, and thank you, Gabriel, for those comments. I appreciate that. Exactly the question that Ms. Jensen asked about what the anticipation is that's invoking all of these changes and tidying up of legislation. And you referenced the bank failures or the financial crisis, not the bank failure, sorry, the financial crisis in 2008. I'm wondering, we've heard a lot from the Bank of Canada, from the governor and from other financial experts that inflation is actually quite high right now. We know that. We know from economists that it's nipping at 4%, and that's without the increase in housing. And that interest rates are low. And we know that interest rates have to go up. We know that credit has been easy to get the last several years, and that interest rates are low today. Have you done some scenario planning that you're anticipating some significant losses in the banks, and this is a matter of tidying up legislation to prepare for that?
In terms of scenario planning, I'm not in a position to really to speak to that about losses to the banks. What the legislation deals with is really the framework, and I think Mr. Chair made a reference to the Boy Scouts. It's all about being ready, and drawing from, as I mentioned, major reforms that were made a number of years ago, and we're really into the refinement stage of the legislation here.
Shall clause 137 carry on division?
Carried on division.
Okay, clause 138, there was an explanation on that previously. Is there anything further? Shall clause 138 carry on division?
On division.
Clause 139.
139 is the coming into force provisions of the sections 129 to 131, and also includes that transition period that I mentioned of 2 years. So there's that section 132 would come into force to repeal the transitional rule after 2 years.
Shall clause 139 carry on division?
On division.
Okay. Thank you. Thank you very much. All then turning to division 2 on claimed amounts. From previous explanations, this is pretty straightforward. Could we see sections 140 to 150 as one with one explanation?
No, I don't think so. We'll do it separately.
Okay.
Thank you, Mr. Chair.
Oh, thank you, Mr. Fast. Then we'll go to clause 140. I'm not sure who's coming in this one. I see Ms. O'Brien still here.
Mr. Chair, I would direct this to my colleague, Nicolas Moreau.
Okay.
Nick, are you on the line?
They'll come in and they're likely to be let in.
Good evening, Mr. Chair. Sorry about that.
Good evening. Welcome, Mr. Morneau. Go ahead.
Moreau. Yeah, you say that often.
Morneau.
Yeah.
Don't do that to the
guy. my sincere apologies. Go ahead, Mr.
No problem. So I will cover section 140 to 150. Les changements proposés ici concernent la modification du cadre des actions.
And what we're talking about here is legislative amendments about the efficiency of the program and allow Canadians to recover the sums. And I'm talking about Section 140. It amends the Bank Act of Canada in order to allow the Bank of Canada to be able to publish on its website any information with regard to deposits or other unclaimed sums, and that is with regard to activities. Making things easier to find.
On the line, go ahead, Ed.
So I'm correct in understanding that right now the Bank of Canada does not have the power to publish this information publicly. How do people find out right now whether there are unclaimed amounts in their name?
They do have the power. Good question, Mr. Fast. But it's not explicit in the act right now. That's why we wanted to make it more explicit and make sure that they will be allowed to publish some of the extra information we are requesting through those amendments.
But the bank is doing it right now.
Of course, yeah.
Okay, thank you.
Shall clause 140 carry on division?
On division.
Clause 141.
Okay, l'article 141.
With the changes here, we're also trying to include unclaimed pensions. So we're talking about pension plans here that are under federal legislation. And so what we're proposing in 141 is to put in place a legislative framework similar that exists for financial institutions. And it also includes publishing information.
41 carry.
On division.
On division. Clause 142.
L'article 142 est un amendement corrélatif à l'article
142 is a consequential amendment to 141 from the Act on the 1985 Act on the pension delivery standards.
Shall clause 142 carry on division?
On division.
Clause 143.
Okay, l'article 143 concerne la loi.
143 concerns it amends paragraph 424. It's on the Trust and Loan Companies Act, and we want to broaden the program to include foreign entities, and we want to ensure that financial institutions will transfer to the Bank of Canada during a waiting period the numbers of the SIN numbers, and allow them to yes, and also we want the signing cards are also transferred to the bank. Once again, these are clarifications to ensure that information is not lost or transferred to the Bank of Canada, and that the Bank of Canada can use this information to find as quickly as possible the people who are coming to claim the unclaimed sums. So that's 143.
Any thoughts on that? We're about one page 176 of the bill, I believe. Shall clause 143 carry on division?
On division.
Good. 144.
Oui, l'article 144, c'est toujours ici.
Yes, this is under the Trust and Loan Companies, and currently the program only has the mailing address, and so what we want to do here is to broaden the program so that people can use electronic means, because people can now be found through their email addresses. So that is what is requested here in 144.
Shall clause 144 carry on division?
Eminently sensible. On division.
All right, on division. Clause 145.
L'article.
Section 145 is similar to what I presented with regard to changes to the Trust and Loan Companies Act, and that is to ensure that the paragraph 438.1 will include bank accounts that will be, and information transmitted to the Bank of Canada. And once again, referring to SIN numbers and electronic addresses.
Clause 145 carry on division?
On division.
146.
146, encore une fois, c'est très similaire à...
Once again, that's similar to what I explained. It's once again, it's to ensure that email addresses will be transferred from banks to the Bank of Canada.
Questions? Shall clause 146 carry on division?
On division.
147.
147 is similar to what I presented before, but it's for foreign banks. So it's for trusts, and the foreign banks must follow the same rules for transmitting information.
Clause 147 carry on division?
On division.
148.
Article 148, j'ai l'impression de me répéter, c'est encore une fois.
I feel like I'm repeating myself, but once again, this is to allow foreign banks to communicate to email addresses of people who may have lost their accounts.
Mr. Morrow, nobody repeats themselves around this committee very often, you know. Shall clause 148 carry?
On division.
On division.
You know, I'm hoping that maybe there's some money that's coming my way once you put this all in place.
They'll post it in red letters, Tamara. Shall clause 149.
L'article 149, c'est un article.
149 is a coordinating amendment, so amendments that were made in 2007 that will depend on the coming into force of other clauses here.
Clause 149 carry on division.
So do we have any idea what those clauses are? They go back to 2007. Do we know what those amendments are?
Yes, I cannot provide you full detail, but some of them are linked to the information that needs to be transferred to the Bank of Canada. Like there's some of it that was not even required before that they do have, but we're adding to it with this new amendment. But I don't have the full detail, but it some of it is associated with the information that's transferred to the bank.
Okay. Shall clause 149 carry on division?
On division.
Okay. 150, the last clause in division 2.
Oui, l'article 150, c'est
150 is simply the coming into force of different measures. So there are two different dates. One that concerns the pension payments, and the other that has to do with an amendment to the general framework of the unclaimed sums.
Just wondering why you don't have a specific date attached to both of those sections, subsection 1 and subsection 2 on 150 there. And is there an anticipation as to when the governor and council will make that order, or could we expect them to sit on it for years? Why not a date?
Good question, Mr. Falk. Thank you very much. There's no date because we're currently working with the Bank of Canada to make sure the systems are aligned with what we're requiring here. So we're working with them. It should come into force really soon as we're able to make sure that the program are ready to take the new information we're requiring. In term for the pension, however, there's a bit more work to be done. That's why we're asking for a separate date there.
Okay, so the intent isn't just to sit on it and then pull it out when you need it. It's just a due process.
Oh, no, not at all. We're already working on it. And like I'm telling you, that the system are being changed right now.
Okay, thank you. Shall clause 150 carry on division?
On division.
Okay, then turning to Division 3 budget. Thank you very much, Mr. Morrow. I don't know whether you're here for the next one or not, but in any event, Division 3 Budget Implementation Act 2018 number 2, clause 151.
Hi, Mr. Chair. It's Erin O'Brien, and I'm happy to take the committee through the next two clauses.
Okay.
So Division 3 proposes a technical amendment to the scope of the Financial Consumer Protection Framework that is outlined in the Bank Act. So specifically, Clause 151 amends the Bank Act by adding a section following Section 627.1 to clarify that the statutory right to cancel a contract with a bank only applies to retail consumers, which are individuals and small and medium-sized businesses, and exclude large businesses.
Do I see any hands up on that one, Mr. Fast?
Yes, the obvious question is, have you defined what a retail consumer is? I know you've done it in broad terms. Is that actually spelled out?
So the intention, so a retail consumer, meaning a specific individual or small business. And so that's who the Financial Consumer Protection Framework applies to. The trick is right now under the Bank Act, the language is it's ambiguous, and so we're bringing forward this technical amendment just to clarify that large businesses would not be eligible for the right to cancel a contract automatically.
So in the interest of less ambiguity, you've used the term small and medium-sized businesses. Is that defined anywhere so it's clear we're not talking about larger businesses?
So what we do through this amendment is instead of defining a small, medium-sized business, we define a large business. And we chose to do that because that definition currently exists in the Bank Act. And I believe, I think I have the definition right here. So a large business would comprise a business with authorized credit of more than $1 million, more than 500 employees, and annual revenues of more than $50 million.
Okay, that's very helpful. Thank you.
Okay, Ms. Jansen, you had your hand up. Mr. Falk.
And just for clarity, Ms. O'Brien, they have to meet all three of those thresholds, not just one. Is that correct?
That's correct.
Okay. Then shall clause 151 carry on division?
On division.
Okay. Clause 152, Ms. O'Brien.
So 152 are simply coordinating amendments to give, in essence, clause 51 or 151 effect. It's a bit complicated here because currently the Financial Consumer Protection Framework is not yet in force. And so, in essence, this would just bring the amendment into force at such a time when the Financial Consumer Protection Framework comes into force.
No questions? All right. Shall clause 152 carry on division?
On division.
Okay. We're turning then to division 4. Sunset provisions. Do we want to see, there's no amendments. Do we want to see clauses 153 to 157 as one?
No, we'll do them separately. I like this process.
We'd like to see you stay principled here.
Well, Mr. Chair, let me just add, I am learning a lot here, and I'm sure my colleagues are as well. This process is actually well suited for informing us as members of this committee.
I expect you to get up in the House and say, what lessons I've learned from the Budget Implementation Act. I'm now a more brilliant person than I was before. So
the only problem, Mr. Chair, is that $354 billion is a very expensive education.
It is an expensive education, but it's worth it when you're dealing with Mr. Fast. Okay, let's go to clause 153. Are you on this one too, Ms. O'Brien?
No, you will see the friendly face of my colleague Manuel do so. So he'll take you through 153 to 157.
Okay, Emmanuel. I got my bill up here, so I can't see the whole screen. Not on yet.
All right, good.
There we go, Manuel, do so. Clause 153, Manuel. I don't see you. I see your name.
A second here.
There you go. We got you.
All right, thank you. So good evening. Clause 153 would extend the sunset date by 2 years to June 30th, 2025 for trust and loan companies under the Trust and Loan Companies Act.
Okay, is there any discussion? Hearing none. Shall clause 153 carry on division?
On division.
Clause 154. So clause 154 would extend the sunset date for 2 years for banks and authorized foreign banks under the Bank Act.
Mr. Falk.
Yes. Can you just help me understand what that sunset clause is for?
It allows a regular review of the financial institution framework every 5 years, it sunsets the ability of those financial institutions to operate, and that allows a review by government and parliament of the financial institution statutes, making sure that they're up to date and technically sound.
Okay. Shall clause 154 carry on division?
On division.
Okay. Clause 155.
It extends the sunset date for bank holding companies under the Bank Act.
No questions. Pretty straightforward. Shall clause 155 carry on division?
On division.
Okay. Clause 156.
Extends the sunset date for insurance company, foreign insurance companies, and societies under the Insurance Companies Act.
Mr. Falk.
Yep, we're extending a lot of sunset clauses here. The only thing you haven't provided is the rationale for doing it. Is there a reason we're doing it?
The reason is it's going to allow the government and Parliament to take into account the full impact of the pandemic by extending it by 2 years.
Okay. Shall clause 156 carry on division?
On division.
On division. Clause 157.
It extends the sunset date for insurance holding companies under the Insurance Companies Act.
I see no hands here, so shall clause 157 carry on division?
On division.
On division, that finishes division 4, and we'll turn to division 5, clause 158, and we have an amendment BQ4 by the bloc. Go ahead, Gabriel, the floor is yours.
Merci, Monsieur le Président. Cette section-ci.
Thank you, Mr. Speaker, Mr. Chair. This is about, this is about the Canadian Securities Regulation Regime Transition Office Act, and there is a consensus across Quebec. It is very important for our economic model. Businesses with headquarters in Quebec. For example, if we add up all the businesses that are linked to the Autorité des marchés financiers in Quebec, we're talking about 100,000 jobs, good jobs in Montreal. So here, this part of the bill reinforces the transition to a type of office, because we know that if all of that is centralized in Toronto, then they will say, okay, in Quebec, you continue to function as you wish. Then we're going to be sidelined. And I'd like to remind the members of the committee here that Canada is a federation, and therefore not all the powers should be centralized in Ottawa, and the financial powers in Toronto either. the Canadian Securities Regulation regime, which would be centralized in Toronto, is just a gift being given to Bay Street. And the passport system works well. So what the amendment proposes here is that in Bill C-30, we propose that some $120 million be given to the transition office. Well, but what we're doing with our amendment, we're establishing that it should have a value at $1. And I might remind you that all parties in the National Assembly and everyone in Quebec is unanimous. We do not want this type of centralization. It's going to undermine the economy of Quebec and our entire economic model, and the companies with their headquarters in Quebec. So if you vote against the amendment, and then if you vote for this, means that you're voting against Quebec. So before closing, I might just remind you, Mr. Chair, something very important. There are two periods gone. Canadians are leading. The Canadians are leading 3-1. So everything's possible. And so we wish all the best for the Montreal Canadiens. And I would ask you sincerely to vote for my amendment. And Mr. Chair, I'm going to call for a recorded vote for the amendment and for this portion here of the bill. Thank you, Mr. Chair.
As soon as we go through the list of speakers, Mr. Fraser.
Mr. Chair, thank you. My friend and colleague, Mr. St. Marie, will be pleasantly surprised that I'm completely behind his support for the Montreal Canadiens. However, he'll not be shocked to find I take a different view of his proposed amendment. I'm curious if my understanding is there's some serious work that's being done with the Transition Office on fraud prevention, as well as cooperation, not only in the jurisdiction of Quebec, but with BC, Alberta, Ontario, with the Transition Office. I'm just curious if officials can offer commentary as to the impact of the proposed investment, reducing the maximum financing to the office from the government to $1. What impact would that have on a day-to-day basis for the work that the office is actually doing?
So who do we have for officials on this one? Ms. O'Brien, or is others coming online?
It's going to be me, Mr. Chair, Jean-François Girard here.
Go ahead, Mr. Girard.
So just to clarify the effect of this amendment, right now the appropriation in the legislation is set at $107.5 million, which essentially represent the cumulative amount that's been paid to the office since its creation in 2009. So the amendment itself would increase the statutory appropriation by $12 million. So I think that's a point that is that should be made to clarify the actual scope of this amendment. With regards to the question from Mr. Fraser, the Transition Office, since its creation, has done a lot of work in multiple phases of the project. In the recent past, so in the last couple of years, their focus has really been on developing what would be the management of systemic risk. So the cooperative project had two components, which is one is the securities regulation that is done currently by the provinces. And the other element was the regulation of systemic risk in capital markets, which would be done pursuant to a federal authority, and for which draft legislation was published a few years ago that would provide the framework for that regulation of and prevention of systemic risk. So the focus of the Transition Office recently has really been on this management of systemic risk. So if the funding were not to be provided, it would essentially cease that work. That would be done pursuant to that federal legislation. And essentially, the office would have to close in the short term if the funding is not extended.
All right, Mr. St. Marie, you want to make a comment here before we go to a vote, Gabriel?
Oui, tout à fait. Merci, Monsieur le Président.
Yes, please, Mr. Chair, and I'd like to thank Mr. Girard for his answer. Yes, and that's exactly what I'm calling for, that the transition office should cease its activities. The studies on the systemic risk, the Autorité des Marchés, done by the Autorité des Marchés Financiers, they are fully capable of doing that. So here we're not talking about a model that is more efficient. It's simply a gift to Bay Street that wants to centralize the securities powers theirs, which means that the securities would be all centralized. And I have to say, there is a consensus in Quebec. We're talking about 100,000 jobs in Quebec, and the very economic model of Quebec is companies that have their headquarters in Quebec, mostly in the Greater Montreal region. That's our model. And if we move forward with this, that means shutting down the Quebec economy. And so we're talking about the economic model of Quebec here. Mr. Girard said it very clearly. The funding for this project is being doubled. Is Canada a federation, or do the provinces still have powers? Because otherwise Canada is just going to centralize everything, and it's not a federation anymore. Everything happens in Ottawa or Toronto. So I might remind you, there is a strong consensus in Quebec. All the parties in the National Assembly, even the Liberal Party, and all of Quebec Inc., all of the businesses that have their headquarters, their head offices in Quebec are against this. We're not talking about American subsidiaries. We have head offices that make decisions. So if people vote for this and vote against my amendment, they're voting against Quebec. So if Mr. Fraser is supporting us, that's great. But please vote for Quebec by voting for my amendment. Thank you, everyone.
Jansen.
I wonder if it's possible for Mr. St. Marie to further explain your position. I'm not sure I quite understanding it, but could you kind of broaden it out and maybe make it as simple as possible? Sorry.
Oui, je vais essayer.
Yes, I'm going to try. I don't have all my notes with me, but it's it's fairly complex. However, this bill that we're voting on seeks to close down all head offices in Montreal, Calgary, Vancouver, so that everything is centralized in Toronto. And that's at the request of all the big banks on Bay Street, which means that Canada will be more centralized, and it'll be much less of a federation. And the decisions made by the stock market and by securities powers that are made in Calgary and Montreal and Vancouver, and those entities speak among themselves, and the passport system works very well. And now this 158 here wants to shut all that down, and for the Quebec economy, that will be devastating because it's our very economic model, and it will be destroyed. And that is the only part of C30 where I am calling for a recorded vote, because voting against my amendment and voting for this part of C30 is a vote against Quebec. Thank you.
May I ask a follow-up of Mr. Girard? Mr. Girard, does that correctly explain the situation? Is that accurate?
I guess it's to be fair that there's a divergence of opinion on the merits of this initiative. Some provinces are supporting it. Some provinces are not supporting it. And I don't think we can settle that tonight. Really, going back to the amendment itself, it would provide funding to the transition office. And the office is advising the federal government on, as I mentioned in the recent past, on how it could regulate and prevent systemic risk in capital markets. And that's something that would be under federal authority.
Mr. Fast, and then maybe we can go to a vote.
Yeah, Monsieur Girard, you said that some provinces are supporting it, some are not. Obviously, Quebec is not. What other provinces are not supporting it?
So notably, like Quebec and Alberta have been vocal opponents of the initiative. But I guess one of the main point I think is important to understand is there are really two components to this initiative, and one of them was the regulation of securities, as I mentioned earlier, which is done by the provinces right now, and it would be pursued if the project were to go ahead pursuant to provincial legislation, and it would be made through the advancement of a provincial initiative. The other component is the one that deals with systemic risk in capital markets. That one is the federal element of this. And I think they're related but distinct elements of the project.
Okay, I believe, are we ready for the vote on the block amendment 4, which is on page 185, relates to page 185. All right, Mr. Clerk, could you do the roll call?
Ms. Derowitz.
No.
Mr. Fragiscatos.
No.
Mr. Fraser.
Je suis contre.
Ms. Koutrakis.
No.
Mr. McLeod.
No.
Mr. Falk.
No.
Mr. Fast.
No.
Ms. Jansen.
No.
Mr. Kelly.
No.
Monsieur Sainte-Marie.
Oui.
Mr. Julian.
You're muted, Peter.
Désolé, c'était oui.
Yeas pour 2, nays contre 9, 9.
The motion is lost. Mr. Falk, you have your hand up? Okay. All right.
Je vais demander le vote.
I'd like a recorded vote for the section we're about to do as well.
Okay. So the BQ4 is lost on clause 158 as is currently written. Mr. Clerk, could you do a recorded vote on that?
Ms. Derowitz.
You're muted.
Sorry, I'm getting tired. I vote yes.
Mr. Fragiscatos.
Yes.
Mr. Fraser.
Yes.
Ms. Koutrakis.
Yes.
Mr. McLeod.
Yes.
Mr. Falk.
No.
Mr. Fast.
No.
Ms. Jansen.
No.
Mr. Kelly.
No.
Monsieur Sainte-Marie.
No.
Mr. Julian. Mr. Julian.
You're muted, Peter.
No.
Yeas pour 5, nays contre 6, 6.
Okay, then the motion is clause 158 is lost. The turning then to division 6, Justice for Victims of Corrupt Foreign Officials Act, the Sergei Magnitsky law. Who's on that? You again, Ms. O'Brien? Clause 159.
No, I'm coming up. But no, my colleague, Justin Brown, will take us through both Division 6 and 7.
Okay, Mr. Brown. I would, while we're waiting for Mr. Brown, I would remind committee members that we have an absolute hard stop at 9:30 Ottawa time, 10:30 mine. We just cannot go beyond that due to translation services. So obviously we're going to have to find another time. I don't know when that'll be in terms of Bill C-30. So we'll go to Division 6, Clause 159, Mr. Brown.
Hello, I'm Justin Brown. I'm the Senior Director of the Financial Crimes Policy Section at the Department of Finance. I would ask the clerk maybe to give access as well to Neelu Shankar, who's a Deputy Director at Global Affairs Canada, who can support if there are any questions on this clause. So it's Clause 159. This section amends subsection 7.1 of the Justice for Victims of Corrupt Foreign Officials Act, or the Sergei Magnitsky Law, so that entities regulated under this act are no longer required to disclose to their regulators the fact that they do not have in their possession or control property of a foreign national who is subject to sanctions under the act. In addition, it requires that those entities must disclose without delay, and once every 3 months after that, if they determine that they are in possession or control of such property. Thank you.
Do I see any hands up? Clause 1, sorry, Ed, go ahead.
Yes, I want to just ask, now, with these amendments in place, regulated entities, in other words, financial institutions, will be required to report when they determine such property is in their possession. In other words, property of individuals that have been sanctioned by the Sergei Magnitsky Law. But what is the sanction for not doing so? So we've got the banks who no longer have a proactive obligation to report on a nil return. You know, my concern is that over time, the oversight becomes laxer and laxer. And if in fact a bank deliberately or even negligently fails to report, what is the sanction against them for not reporting?
Thank you. Has Neelu been provided access? Hi, Neelu.
Hi, thank you for that question. So under the Justice for Victims of Corrupt Foreign Officials Act, the penalties for noncompliance, so the penalties for noncompliance are actually criminal in terms of the orders and regulations made under the Act. And so, financial institutions have an obligation to do this kind of reporting, and they also have a corresponding duty to determine on a regular basis. So this is basically, it's the requirement as part of their ongoing reporting to their regulator.
Okay, but my question is failure to file a monthly report, does that actually trigger those criminal sanctions? Or are the criminal sanctions effectively targeted at other behavior?
So the criminal sanctions that are set out under the Act would apply to any of the orders or regulations that are made under Section 4. So that would be in relation to the freezing of the funds that belong to a listed person.
You okay, Ed?
Not quite, because it's the behavior that would trigger the sanction. And are you suggesting now that the criminal sanctions will be triggered by a failure to file a report?
So no, so basically when a financial institution or any of the reporting entities that is identified in Section 6 as having a duty to determine if they're in the possession or control of any of the property of a listed person, they have a corresponding obligation to, as part of their ongoing reporting to their regulator, to comply with those provisions. So the criminal penalties that exist under the Act are with respect to the freezing of the funds. So the financial institutions have a duty under the law. They have an obligation to freeze those funds, and a failure to comply with those orders could result in a criminal penalty depending on the circumstances of that behavior. Now, the requirement to report is part of the kind of regulatory oversight that happens as, that's set out as the obligation for their ongoing duty to determine whether they have this property. It's part of the determination of whether they're freezing the property. So there's a connection between the different actions in the sense that the financial institutions they must be freezing these funds if they have any in their possession or control. It's part of that obligation, but the duty to report does not come with criminal penalties if there's a failure to do one of those things.
It's the failure to actually freeze funds that attracts the sanction.
Yes, that's correct.
Yeah, got it.
Mr. Falk.
So in the event that there's not necessarily funds, but let's say a financial institution would have a mortgage on a property that someone has been found guilty under the Magnitsky Act, do they have to report that mortgage, and do they have to then freeze the mortgage, and that the government then has access to the, I guess, equity that's built into the real estate?
So currently under the terms of Section 6 and Section 7, a reporting entity has an obligation to, on an ongoing basis, determine whether they are in possession or control of any property of a listed person. And so that would include things like, mortgages. It would include, financial instruments, basically any sort of, financial instruments such as an account. It could cover a range of different elements. And in the case where they do identify that they are in possession or control of that property, they would not be able to engage in any dealing with respect to that property. So that would include or provide any financial services to that listed person. So that would include, the payment of dividends, any sort of dealing in any mortgages. Basically, it's quite a broad transaction ban that would be included in these provisions.
May I follow up, Mr. Chair?
Yep, go ahead. Go ahead.
Okay, so if there was a mortgage on a piece of real estate for an individual that was under the sanction, that individual wouldn't even be able to buy out that mortgage from the financial institution. Then, in a case like that, if he wanted to quickly try and protect his asset, it's not as though he could take cash from another institution and rifle it over there, pay off the mortgage, and have a piece of real estate that would be unencumbered. As soon as someone's sanctioned, the bank is then also, or the financial institution is also responsible to make sure that there's no further transactions in regards to any mortgages or deposits, any financial instruments.
Yes, that's correct.
We're okay then? On the questions, then shall clause 159 carry on division?
On division.
On division. Okay, thank you, Mr. Brown. Then before I start Division 7, Proceeds of Crime, Money Laundering and Terrorism Financing Act, Gabriel, you're not on screen, but I think you're there. You'd mentioned in the beginning you wanted to say a couple of things at the end of the meeting, I believe. You still want to do that? Because I got to leave okay. I have to leave enough time. I don't want to run into the translator's time tonight. I want to close dead on 9:30 Ottawa time. All right, then we'll start Division 7. There is no amendments in clauses 160 to 177. Do we want to see them as one?
No.
No?
No.
All right, then we'll go back to one by one. Clause 160. I'm not sure who's on this. Miss O'Brien.
It's still me, Mr. Chair.
Okay, Mr. Brown.
And I'd ask the clerk to also provide access to Gabriel No, who's a senior analyst on my team, who may also support with questions as we go through, at least for the next 10 minutes or so. So as a sort of umbrella for clauses 160 to 177. These all relate to strengthening Canada's anti-money laundering and anti-terrorist financing regime. The government continually works to strengthen and modernize this regime, for example, to respond to technological changes and evolving threats. Part 4, Division 7 proposes amendments to the Proceeds of Crime and Terrorist Financing Act with those objectives in mind, and also includes several clarifying or otherwise technical amendments. So looking at clause 160, this clause makes persons and entities that engage in the business of transporting currency or certain financial instruments subject to the anti-money laundering and anti-terrorist financing regime under the PCML-TFA. It's primarily meant to cover services such as those provided by armored car companies based in Canada.
Okay, well, some of the people on this committee had quite a study on money laundering at one point in time. Any questions on clause 160? Okay, shall clause 160 carry on division?
On division.
Okay, clause 161.
Clause 161 amends the definition of heads of an international organization to include persons who are the head of an international sports organization. It amends the definition of politically exposed domestic person to clarify that it includes a list of offices or positions, to clarify that this includes members of the legislature of a province, and also that the term mayor includes other equivalent positions from a chief officer or municipal or local government.
I don't see any hands. Shall clause 161 carry on division?
On division. On division.
Clause 162.
This clause amends subsection 9.6 sub 3 of the French version of the Act to better match the English version by clarifying that a person or entity must take the special measures referred to in the regulations if at any time the person or entity considers the risk of this high or in prescribed circumstances. So it adds the at any time to the French version.
Okay, shall clause 162 carry on division?
On division.
Clause 163.
This clause strengthens money service business registration requirements with FINTRAC, who's the anti-money laundering and anti-terrorist financing regulator in Canada, to help prevent the abuse of those services by criminal actors. The list of designated offenses that make individuals ineligible for money service business registration with FINTRAC would be expanded to include other offenses such as human trafficking, weapons trafficking, smuggling, and sexual exploitation. In addition, the amendments would make individuals subject to financial sanctions automatically ineligible for money service business registration.
Pretty straightforward. Shall clause 163 carry on division?
On division.
On division, 164.
This clause specifies that the measures in a directive issued by the Minister of Finance can include ascertaining the source of virtual currency in any financial transaction. So it more or less adds the virtual currency to the language in the existing language in the law.
Don't see any hands. Shall clause 164 carry on division?
On division.
Okay, 165.
So the next couple clauses relate to enabling a cost recovery scheme for FINTRAC's compliance activities under the law. Clause 165 allows for the Minister of Finance to advance amounts out of the Consolidated Revenue Fund to FINTRAC on terms and conditions specified by the Minister to permit FINTRAC to defray its cost of operations, and different provisions related to those actions.
No hands. Shall clause 165 carry on division?
On division.
166.
166 also relates to the cost recovery scheme for FINTRAC's compliance activities. And this includes the obligation for FINTRAC to ascertain those expenses and to assess a portion of these expenses to regulated entities, and also would provide FINTRAC with the power to prepare an interim assessment. It allows for further details of this cost recovery scheme to be most of the details of the scheme would be prescribed via regulation, and there'll be later clauses that speak to that.
Okay, clause 166, does it carry on division?
On division.
Okay, 167.
This clause clarifies that for greater certainty, if FINTRAC receives a report from a reporting entity, it may, for the purpose of analyzing and assessing that report, request that the reporting entity provide additional information. It's rather technical.
Okay, do I see no questions? All right, Ed's thinking of one there, but he didn't get his hand up. Mr. Falk, you did. You're okay? Okay, shall clause 167 carry on division?
Division.
Okay, 168.
So sections 55, 55.1, and 56.1 of the Act contain rules around the disclosure and use of information as it relates to a couple different areas. So it relates to the designated information for both domestic money laundering investigations, also for national security reasons, as well as to foreign authorities with those similar duties. So the next couple of clauses are also quite technical, and they're all rather similar to each other. They include things such as looking at the conditions under which FINTRAC can disclose this information. They align some of the text between English and French. They include attempted transactions in the information that can be disclosed, not simply actual transactions. They also clarify some of the language around designated information that FINTRAC may disclose with respect to trusts.
Mr. Falk.
Yeah, just as a point of clarification, the disclosure would be made to who?
It would depend on the provision. It can. There's a list of what's called disclosure recipients under the Act. So those recipients are different if we're looking at either sections 55, 55.1 or 55.6. And those could include domestic authorities that are involved in money laundering investigations, or who have powers related to national security, or have foreign authorities who have similar powers.
And is a prescription as to who gets reported to, is that somewhere found in the regulations?
The disclosure recipients are specified in the Act itself.
Ms. Jansen. You're muted.
Sorry. About the idea of putting in attempted transactions. Why would you put that in there? Like, it seems, I don't know.
So it could cover situations where a transaction is attempted but not completed. For example, if the financial institution, if it involves a financial institution and they have reason to suspect there's something illicit going on, they may, according to their own internal policies, restrict the transaction. In which case, we would still want that information to be able to be reported and disclosed to different authorities.
Okay, thank you. Shall clause 168 carry on division?
On division.
On division. We have about 2 minutes left. Would it be possible to see what sections, clause 169 to 177 as one, and get an explanation on that?
That's a lot of material, Mr. Chair. No.
Okay. All right. We will go to 169 then.
169 has very comparable changes as clause 168, but this is the clause that refers to domestic authorities with a national security focus.
Shall 169 carry on division?
On division.
Okay, 170.
Again, 170, the amendments are very similar, except these ones relate to disclosure of information with respect to foreign authorities.
Shall clause 170 carry on division?
On division.
Okay, we are going to have to end it there. Just we are in a bit of a bind on C30 and everything that it represents. But in any event, that's Parliament. There is no meeting times that we can scrounge up for tomorrow. I mean, part of this is how Parliament works now with Zoom and committees backed up and only so many rooms and so many people to assist with translation. So it is what it is. So there's nothing on Friday. There's absolutely nothing on Monday. We have a regular time slot on Tuesday, and we will attempt to get more time. I don't know whether if I would suggest to people to ask their whips to see if we could get more time so that we can get this bill back to the House floor. So that's just for people's information at the moment. Look, to all the witnesses that are in the waiting room, and to the witnesses that, to the officials that came and answered questions, some of them for a very long time. We want to give our thanks on behalf of all the committee for your efforts tonight, and that's on behalf of every member here. Pat, you have your hand up.
I was really only going to say just that we had extraordinarily good information today, and just to thank the tremendous work of our public servants that provide such professional service to Canadians. So thank you.
So we'll second that, and to our translators, I know on this technical stuff, it is really, really tough to sit in the booth and have to translate a lot of this technical stuff, especially when it comes to finance issues. Fisheries was the same, though. And agriculture, too. Lots of technicalities there. Anyway, with that, folks, we will adjourn this meeting, and there will be the next meeting at the call of the chair, but it will be a Tuesday, I'm sure. With that, meeting adjourned. Thank you all. Thank you.